And we actually have all of our hosts from the very first session who are joining us today. Just please give me a show of hands here. There we go. Beautiful. And we still have people joining in, actually. So here we go. We got another 5 folks who are just joining. But I think we can get started very soon. Give us another couple of minutes, just because I think we can let folks in as well, and we'll get started in a minute. And please keep yourself on mute. We're going to keep reminding everyone to do so. And if you've just joined, and particularly if you were not here yesterday, we invite you to share in the chat where you're joining from, what you do, and any other interesting things about yourself. We're also requesting everyone to be on video because this is a very engaged and open roundtable. And but keep yourself on mute, of course, if you're not actively speaking or engaging. All right, we're 36 strong and still going on, but I think this is good. I think we can get started with our very first session today. The first roundtable on redefining economic value. So I'll start the session because this is a topic that's very close to my heart. Over the past 6 years, sort of being in the blockchain space, there's a lot of thinking and doing. We have been doing individually first for myself, but also more recently under the Digital Economist banner and umbrella. So once again, my name is Navroop Sahdev. If you missed the introduction part, that's the pre-recorded version from yesterday as well. And like I said, familiar faces were joining in. I'm the founder CEO of the Digital Economist, and I have a fantastic group of people here, part of our ecosystem, who are joining us. And just to kind of take a step back and share with you a little bit about what we learned from day one, right? We had a very active and very engaged set and series of roundtables, and we talked everything from data to equity, and parse through different perspectives. We had 20 hosts for 4 for each roundtable, and the same for today. And one of the key learnings for me, particularly, were around this multiplicity of perspectives that are so key to building and fostering shared value, right? The idea of going beyond stakeholder capitalism is to really foster that shared value. And this roundtable in particular is focused on figuring out the technological aspects of it, what that means for the global economy. And we have a fantastic group of colleagues who are joining us as hosts as well as participants. We'll get into that in a bit, but I just want to share 3 key insights with you as we kind of dive into it, and I'll hand it over to Xander right after that. The first of them being, of course, the digital economy, right? The connectedness that is core to the digital economy. And the important thing here is figuring out whether or not our current economic structures are actually built for a highly connected global economy. We think there's a lot of work that needs to be done, and I personally have been reading and writing and researching and teaching on this over the past years. So what are those structures and what are those things that are important when it comes to building for an increasingly interconnected world? And that's the first thing, right? And a lot of the digital technologies, particularly diving straight into blockchain or distributed ledger technologies more generally, helps us reduce some of those economic barriers, if you may, if we choose to, through those structures, through better systems. And from an economics perspective, what it does, first of all, is reduces some of those asymmetries, information asymmetries. With digital tech, we have information available like no other time in history, right? And also access. And reducing those search and transaction costs, as we call them in economics, is sort of the other key aspect. When it comes to platform economics, what we're looking at is really reducing those search and transaction costs to a point where new markets could be formed. So that's really my takeaway from here that I want us to keep at the back of our mind as we kind of go into this roundtable. And of course, automation, which is happening regardless of DLT, but it's even more important in that context where smart contracts can take to a whole new level. And finally, the notion of systemic risk. See, the trade-off between increasing connectedness is that we also end up having highly fragile systems that have a lot of risk concentrated in few parts. We saw that in the 2007 and 8 financial crisis. We're seeing that with the pandemic. So the question is, can we build decentralized technologies that can better hedge this risk? So let's think about that a little bit. And then the question is on what is the revolution? The revolution is that of value. The revolution is data, right? And the fact that this is making us rethink value on how we create value and how we distribute value. And so again, what kind of economic structures are better suited for shared value structures? And when it comes to inclusion, when it comes to equity. And this roundtable is really painting that vision, is really exploring not just what's happening right now, but also futuristically what is needed to get to a better global economy that serves human outcomes, that serves our purpose and our interconnectedness and reflects that accurately. And so I'll leave that with one final sort of comment here, to say that entire economic systems, in fact, operate as something like a vote of confidence. And we'll dive into that in a second. We'll dive into that in a little bit. And the promise and the exciting part of a lot of the new emerging technologies is really about the convergence of a lot of these technologies. And in fact, that ended up becoming the mission statement of this organization, all these learnings that we gained over the years. Let's think about and let's, together hack, for the lack of a better term, on what that looks like, right, when it comes to increasing connectedness for our economic structures, and how do we build a world that goes beyond just shareholder value or stakeholder value towards shared value. And with that, I'll hand over to Xander, who is our next host for this roundtable. Xander, welcome.
Yeah, thank you, Navroop, for having me, and welcome everyone to this roundtable. Exciting topics, absolutely the future. Let me introduce myself shortly, and then go into the what we are doing with this topic within what we are building. I'm the CEO and founder of UNL. It's a mapping tech company also using DLT, but I will be talking about another company that I'm a founder and managing partner of. That's VentureRock. It's a venture capital company that we established a couple of years ago here in Amsterdam, specifically for what we saw in the on the European continent, a lot of challenges regarding venture capital as an asset class, as everyone was organizing itself locally and not as a European unified market. And we wanted to change that because we see that Europe is lacking behind what is happening in US and now in Asia. And you see that tech companies don't get the chance of evolve to global tech companies, or they go and raise capital in the US or in Asia. So we created Venture Rock for solving this problem. We're digitizing the supply chain behind investing in the early stage, the tech startups. We think and believe that startups are the engine of not only the economy, but also drivers of innovation. And we need to give them the fair chance of evolve into companies with impact. And that's the reason we created Venture Rock. We created the Venture Rock operating system, a protocol to bring founder teams from idea to fully compliant scale-up companies. We implemented a new model regarding that investment. We're doing 4 rounds. When they follow the protocol, the operating system existing out of 72 steps, they get 4 rounds, so they can focus on building their tech and their company instead of focusing on fundraising. And by digitizing the whole supply chain, we saw that we needed new tech to do that. So our first portfolio was around that technology that can help us implement this vision. And of course, DLT is an important part of that. It's a technology that can enable new models, can create liquidity, can give the freedom of exchanging assets between peers. So we decided to look for blockchains that could enable and help us realizing that. But we found out that still the technology is in a state that is not yet there for mass adoption and scalability and speed that we need. So we decided to build our own proprietary around our vision, especially because we saw that still there's a lot of volatility in all the chains regarding their models. And we believe for real innovation, we needed to have a near zero transaction fee to enable innovation and to have that stability to realize new business models. We also used the DLT in our own fund structure to create liquidity for investors. If you see in the classical fund structures, you have a lockup from 10 to 12 years. Makes it for a lot of bigger investors not interesting to invest in early stage venture capital because it's a lot of risk. There is a lot of nurturing going on regarding startups. So and it's not only technology, it's not only DLT, it's not, of course, also legal framework that fits and that can be digitized and be used to what we are aiming to do. But yeah, we foresee that DLT and tokenization or digitization of everything within the investment supply chain is needed, and that goes from tokenization of the cap table within a startup and enabling everyone that is contributing in value creation to take part in that wealth creation. And I always take the example of Amazon. Why would only one person get all the value? Why would Jeff Bezos get the $1 trillion value and not everyone that helped him achieve his goal and build Amazon? So up to the cleaning lady should have a way to be part of that value creation. We believe in and that's in our DNA, in our core, in a fair distribution of value, in extreme inclusion. That doesn't mean only the unbanked being able to participate in the economy. It's everyone having a fair chance of participating in this value creation. And that's what we are believing in. And yes, it's still, I think, in the early days, and everyone thinks DLT cryptocurrency, but that's not it, of course. And cryptocurrency is an industry that we see as absolutely the pioneers, but nothing to do with the capital market or using DLT in financial services. So I think regulations, compliancy, governing structures are an important element to achieve mass adoption in the capital markets and financial industries. And I want to leave it with this. So giving the space to another host.
Thank you, Xander.
Okay.
Matt, would you like to go next?
Sure, thanks, Nav. So hi, everyone. It's a pleasure to speak with you today. So I'm Matthew Lovett. I'm here in two capacities. So firstly, as a board member of the Singapore FinTech Association, and secondly, as a director and a consultant with Deloitte. I'm a lawyer by background, and my experience with blockchain, tokenization, and digital assets comes from my role as an advisor to financial services and fintech. Now, I think something Xander just mentioned, I think really does resound with me, and that was the point around crypto is obviously very often seen to be a pioneer of blockchain, but it is only one and potentially one very narrow application of the technology. And in terms of tangible projects that I've been working on, a few recent interesting examples I think spring to mind, which really demonstrate that. So the first project that I perhaps just want to reference relates to transfers of digital artwork represented by non-fungible tokens. And I think that's a good example of how technology is impacting value creation and value transfer along the lines of what Navroop mentioned. As whilst digital artwork isn't new, how tokenization is being applied to prove authenticity, provenance, ownership of assets is really interesting. A second project that I'm currently working on that has similar applications relates to the tokenization of physical commodities, like limited edition items. Now, in that case, what we're seeing is the technology being used again to improve provenance, to create a marketplace for new types of assets and to enhance liquidity, and also as a means to provide owners with unique membership type benefits that just aren't possible in traditional types of value and ownership that we might be more used to. A completely different project that I also have on the go, which I think bears some resemblance with some of the things that Xander just touched on, relates to the tokenization of financial instruments. So the types of instruments that one of my clients has been tokenizing and where I've been helping them have principally been in the nature of debt securities and fund interests. That type of application largely being focused on improving access to capital and liquidity and reducing transaction costs. And I think the point is here that we all know that blockchain tokenization has been mentioned as a key tool in enabling financial inclusion. But I think it's important to ask what we mean by financial inclusion, and we don't necessarily mean just assisting the unbanked or underbanked to be able to access financial services, but we also mean by improving access to capital, for example, by providing SMEs, startups with better funding options and reducing costs of fundraising. So each of those types of projects, I think, is a good example of some of the benefits that tokenization can bring in action. Not only from a conceptual perspective, but from the perspective of things that we are actually seeing realized today. So I think it's fair to say that the topics that we'll be touching on throughout this session are not just sort of things that are concepts that are just being raised and debated. These are things that are actively being targeted and realized today in practice to greater or lesser extents. Now, my key learnings from my involvement with tokenization and digital assets, I think, have been quite varied. At a micro level, I think many of us know how tokenization might be used as a tool to facilitate financial inclusion and some of the other things that I've just mentioned and Xander has just mentioned. Other aspects that I see in practice include things like being able to bypass the traditional financial system, collateralization applications, fractional ownership, and as I mentioned, lowering cost of capital. But I think there's some really interesting macro level considerations that come out of blockchain and tokenization as well, such as what Navroop mentioned, particularly about how the technology and how it's being deployed really challenge the concept of value. And by that, what I mean is by requiring us to rethink about what we consider to be valuable and how value is created. So things like disintermediation, empowerment of creators, and democratizing ownership are also key themes that I think come through the applications of the type that I've just mentioned. So I'm looking forward to the rest of the discussion. I'll be specifically interested to hear what people think about some of those issues that I've just mentioned, and to hear about other applications, problems, and solutions that any of you would like to share. And I guess with that, I'll hand over to John.
Everyone, I'm John Simmons. I'm the CTO at Source. Absolute pleasure to be here, and I can't thank Navroop and the rest of the team for inviting me. It's always fun to go last of the four speakers, because I kind of get to build on what everyone has said. They've all made truly phenomenal remarks. I'll start off giving a brief introduction to myself and kind of how I got connected into this space of blockchain, distributed technologies, and the crypto world in general, and then go into briefly what I do and what we're doing and what we're trying to do at Source, and then some final remarks, and then kind of open it up to the rest of the roundtable. My foray into the blockchain world and distributed technologies world started around 2012, when at the time I was just insert random, of course my phone's going off at the exact time, insert random university student, trying to just learn my way through what I was studying at the time: cryptography, number theory, and computer science. And it was complete happen chance instance when one of my roommates mentioned this thing called Bitcoin, and I'm like, what is this, and what does it do, and why is it a scam? And as I dive further into it, with the background that I had, and kind of the love for exploring new technologies and finding new problems, Bitcoin was at the time a treasure trove of all kinds of interesting topics and ideas that spoke very deeply and resonated with me. And it was interesting to see the transition to learning about the idea, exploring the idea, and then becoming an active participant in the idea. And that's really where, I think the crux of Bitcoin, and then as a transition to the rest of the decentralized industry and blockchain industry, is this unfederated, permissionless access to become an active participant in the ecosystem. It was only a couple of days later when I decided, I was a nerd all through high school. I just accumulated all this kind of techno garbage in my garage, and so I decided to put that to work and turn a pile of garbage into a functionally money-making machine. Of course, I was making like $3 a month, and at the time it was just interesting and fascinating to see that you could achieve this level of unfederated access, and kind of trustless access to an entire financial ecosystem that spanned the globe. And so we collaborated between a few other roommates. We got a few other machines going, and over time we'd actually built a rather substantial mining operation, borrowing power from the university residents, borrowing power from all kinds of places, because we were just a bunch of young 20, 21-year-olds, whatever it was, and really just getting a chance to play with the technology that none of us really understood. And it was through that I kind of came to appreciate the idea of trustlessness. and trustless access to resources. And as we see, it didn't just stop with Bitcoin and the idea of a trustless cryptocurrency. It was really just about a more foundational idea about open access to resources. And so we transitioned from trustless trustless currencies to probably the more dominant version today, which is trustless computation. We can see that through the use of smart contracts in many different applications and utilities today. And then we transition to we're coming to the precipice of trustless identity and trustless data, and that's really what I speak to about what I do at Source. At Source, we're trying to really open up the world when it comes to access to and utilization of user-centric and trustless data. But not even going or not even stopping at what the idea of trustless data is, because trustless by definition just means you don't necessarily have to be an active participant to be part of the system, and you don't have to have the credentials, you don't have to have the trust. But transition to the democratization of these assets. Democratization is a little more interesting and a little more powerful. The anecdote I shared earlier about me being a number theorist and cryptographer studying at school, that allowed me to have the background to really appreciate and understand the nuances and what was powered by Bitcoin. But the democratization of financial aspects, the democratization of identity, and the democratization of data really opens that barrier of entry to anyone with a cell phone, anyone with an internet connection, anyone with the want and need to go and find and understand these concepts, where you don't have to be a number theorist or a cryptographer or a computer scientist to really understand and appreciate. And so what we're trying to do here at Source is trying to solve the intersectionality of interoperability, user privacy, and democratization of data. And we do that in a number of different ways, using a number of different kind of technologies. We have a very novel, very advanced database that we're building here that kind of redefines how applications and how developers and how corporations really interact with and create value from user data. It really has to start from a point of view of the user is the owner, is the creator, and the authority to who is able to do what with their data. And we're trying to transition from the idea that applications are the gateway to your data, to applications are just one of the very many interfaces you can use to access your data. And that comes to the idea of user-centric data and user-centric databases. And we're kind of marrying that. And we specifically wanted to do off-chain data, off-chain storage, off-chain management of these assets, because blockchains are great at a lot of things, but they're also terrible at a lot of things, and we need to understand what they're good at and what they're bad at. And so we wanted to have we wanted to marry our off-chain utilization of technologies, with a very purpose-built and powerful blockchain to enable, the small bits, and to really be a powerhouse for the parts that don't make sense to be off-chain. And so that really comes down to that trustless consensus of access to and policy of and permission of data. And so we have these this kind of full ecosystem of tools that marry the concept of both on-chain and off-chain. Beyond that, I want to speak briefly or further reiterate what some of my other hosts were mentioning. I think the concept of informational asymmetries is truly perfect fitting for what you can do with tokenization of assets, and in general distributed technologies. When you start talking about trust and what you as an individual, as a user, need to interact with the system, at some level of the stack, there's always going to be trust. And where you place that trust should be a choice of the user. And when it comes to, distributed technologies, distributed ledger technologies, that informational asymmetry is really just a question of where are you placing that trust. And it turns out technology can be a good substitute for having placing that trust in a central authority, in a central government organization, a central actor, whatever that may be. And trying to decentralize that nature of trust is a very powerful concept. But we can't refute the idea that at some level of the stack there's always going to be trust. And we can see that, most recently, in the entire ethos of Ethereum is the idea of, code is law. And that's really great in theory, but it also has a lot of downsides in theory. And just this week there was an astronomically huge hack of one of the various DeFi platforms that resulted in some $600 million evaporating into the world, and it's unfortunate that we have a system that can be as brittle, but it's also really quite amazing that we have a system as powerful that you can have that value capture. And in reality, in the crypto and the blockchain and the just decentralized ledger space, $600 million is a lot, but it's also a drop in the hat of what is actually out there and what is possible. I think the tokenization of cap tables is an extremely powerful idea, and it allows, like I was saying before, just anyone with a laptop, anyone with a phone, anyone with an internet connection to be able to reap in the value and the value creation of a startup, of a corporation. That extends on to tokenization of securities, STOs, and I think what my fellow speakers were iterating and suggesting that are extremely powerful ideas around what you can do with the tokenization of assets, what you can do with the provenance of data, what you can do with the provenance of art, of digital assets, and it all comes together in a very kind of holistic manner. So I'll stop rambling now, and I'll pass it back to Navroop, but that's kind of me and my story.
Great, thank you. Thanks, John. I think forever the most knowledgeable one. This person is an ocean, so keep dipping. All right, we got two folks who'd like to go next. I've got Ranjesh and I'm gonna butcher your name, Boris, I think. Thank you for being on video. The stage is yours, Ranjesh. Try to keep it to 2 minutes, just to offer as much space as possible to other folks in the room as well. Please go right ahead.
Yeah, thank you, Navroop, and thanks everyone. This is Ranjesh Jagannathan. So I work at Citi. So the question is, like, as I heard all of this, there are a lot of different protocols that are in this space. And one big challenge I foresee, and that's maybe the reason why the adoption is always lagging, is how do they interconnect and talk to each other? Because as the more number of protocols grow, it's going to be even more of a problem. So that's kind of an inhibitor for adoption, but at the same time, you can call it innovation. So how do we kind of look at this and really select best in class and then help this to become more mainstream without having to burden and think of the next protocol, the next protocol? So that's what is running in my mind. So I don't know if that's a good question to ask, but I thought I'll just post it.
No, thank you. I think that's an excellent question. I think what would be really cool is to maybe let's keep going, and we'll come back to the questions, because this is not a panel format, it's a roundtable, so everybody is very much equal. I would love to hear
Sure.
from thank you. Boris next. Thank you for sharing that, Ranjesh. I made a note of that in the chat, and I said interoperability, and you're right, that's not something that was touched upon and is really critical in this space. So Boris, the stage is yours. Please go ahead.
Thank you, everybody, for the nice speeches. Just 3 thoughts I want to present regarding how tokenization applies to economic equality and growth. Firstly, the big benefit that can be overlooked is improved corporate governance, specifically in private companies, because instead of having, for example, small number of VCs or generally small number of founders and investors, as private equity and private companies become more open to diverse investors, you get improved corporate governance, because companies take more thoughts into account in their decision making, more, for example, taking into account the needs of local communities, etc., or you get more diversity in terms of racial and gender diversity in the boards and in the shareholder, and therefore you get more responsible corporate behavior overall, specifically in the private sector. Second point to mention is that we need to think about creative applications of tokenization to unleash its full potential. It's not only about for example, fundraising for enterprises or providing access to new asset classes. Things that we've been thinking about or include, like, for example, an opportunity for individuals to tokenize themselves. Often what you really need in order to proceed to the next level of income, especially on the level of the poorest community, is simply you need more cash to invest in more machinery, etc. It is well observed in poor rural community how you get how people, after you simply give them money, significantly improve their quality of life and their income on the long term. So one way to their way to think about tokenization in terms of not only assets and corporations, but also people and their future income as something that you can use to finance social growth. And the third point related to the adoption and growth of tokenization overall. What we find is that one of the biggest problems that business owners, just a bit of context, I am co-founder of the company that helps with raising capital via security token offering, and one of the main questions that all business owners have is how do they pitch it to investors, and why should they do tokenization? Will it help them in the reduction of cost of capital and make it more attractive to investors? And one of the ways in which you make tokenized securities more attractive to investors compared to traditional investment is specifically through integration of tokenized securities with DeFi. Tokenized securities by themselves are a benefit, but only a limited benefit. But when you utilize, for example, the opportunity to trade securities without going to the conventional exchange and they're going through IPO process, through automated market making protocols, you enable, this is the way in which you enable liquidity for smaller enterprises who cannot afford IPO. Or for example, you provide investors with the ability to enhance their yield by using those tokens as a collateral in lending protocols to get some cash, or to stake them in those kinds of protocols. So if you want to really make tokenized securities more attractive and get this space growing, you need to build these links between DeFi and tokenized securities. Given that we are quite late to the market compared to many other companies in the industry and leaders, this is actually a way in which we decide to differentiate ourselves a bit, to look on how we can enable some interface between tokenized securities and DeFi. So these are a few thoughts that I hope will be useful to the community.
Very cool. Thank you, Boris. This is great. I think you shared excellent points about corporate responsibility, creativity, and adoption, kind of touching upon almost a point all of the hosts had mentioned. Actually, it'd be cool if you can share what you're working on in the chat for the benefit of everyone. I just posted a link to the very first blockchain project that I was working on, very first company that I helped build, which is on, bringing liquidity to crowdfunded equity, which is illegal right now, to your point about, going beyond tokenization. Great. So we got four hands raised, and you got to line up. I think this roundtable is going to be busy. So, all right, we got Dr. Sindhu next, Xander, Gabriel, and Leonardo.
Good morning, everyone.
Good morning.
We have seen that the Industrial Revolution was uneven, even the Digital Revolution was uneven, and in the same manner, even the FinTech Revolution is moving in the same genre of being uneven. Because when we are talking of all these digital securities and BLTs, what we are trying to basically discuss is the urban-rural divide here comes to the forefront, and we are talking of the upper layers, not of the lower layers. Now, if we go to the developing societies, and like I am working in India and Africa, I am at a loss how to, first, where is that asset? How to create that asset? Who are going to be the participants? How am I going to utilize that security for trading or value creation? How the assetification of rural economy can be done, and it can be digitized. These are the basic problems I'm looking at. If, let me talk of India. If I go ahead with tokens, like yesterday I talked of for data, holding their data, I'm trying to incentivize them by giving them reward. But that reward I cannot give in form of tokens, because cryptocurrency and tokens are not allowed in India. So I thought, okay, let me go ahead with e-vouchers. Now, fortunately, Government of India has come out with e-rupee, which is basically e-voucher. So it becomes a legitimate tool to reward and incentivize people. Then how to again move it and create the liquidity and the power of security, that it can have negotiability, it can have transferability, it can have the value, all those things. I need to have an apparatus, an instrument, a machine there which can work it in that fashion. So, okay, I created the whole rural exchange, the application, everything is now ready to move, but I'm waiting for the license. Now, with this, what happens? I'm connecting it to rural and urban exchanges. So, rural and urban divide of, say, digital assets and their power and the value can be blurred, and the capital can flow, rural capital can flow to urban capital, and urban capital can come to rural capital. Because whenever we have to, this linkage, then only we can look for development and other things. Now, thirdly, when we are talking of microcredits and all that, that's the biggest gift of fintech. What is happening? It is basically, again, profit yielding. And so even though we have reached there with in name of inclusion and transfer of value, making funds available to them, but the higher rate of interest has made all the microcredits fail. Let me again quote the example of India. Now, microcredit loans are under investigation by Reserve Bank of India. So 24%, 28%. Now, when those poor farmers are unable to pay even 5% interest, how can they pay 24% interest? So it was bound to fail. Now, why I'm talking of all this tech, because we are into this, we are talking of capitalism and participative capitalism, stakeholder capitalism. So these things become very, very important vis-a-vis our latest topic of digital asset and transfer of value and DLTs, because we really need to see where is that asset, who are the participants.
Right.
Thank you.
Thank you, Dr. Sindhu. I would just add a quote here from my thesis advisor at Harvard Kennedy, Ricardo Hausman, back in 2015, and they talked about how everything breaks down in India. All the models break down in India. The country is so big and it's so diverse that, you know, when you have exceptions, the exceptions are so large, there are millions of people, that almost all models fail. So I think it just reminded me of that from 6-7 years ago as you were sharing this. Thank you for your inputs, as well as great to see faces from yesterday. So Xander, Gabriel, Leonardo, you're next, and then we'll call upon John Ray and Mackenzie.
Yeah, thank you. Yeah, indeed, India is a different beast compared to a lot of other countries where we also are active in, but working with local partners because of the complexity. But of course, with these kind of new economical models and real deep tech infrastructures, you also need the government and the support of the government and regulations in place and adoption from an innovative perspective. Otherwise, it won't fly regarding these new capital models and financial instruments. I wanted to react on Boris about equity and the combination of tokenization and DeFi, decentralized financial instruments. There is much more to it to make it fly. It's not just tokenization of your cap table. It's a shareholders agreement. It was all you touched based on it. It's governance. It's how you deal with all the stakeholders. But then, of course, creating that liquidity is through marketplaces. It's through exchanges. So it's the whole supply chain that needs to be in place to make it fly, to make it work. So I wanted to add it on that. So I agree with that, but it's even more to that. It's also the legal structure that are able to be digitized and tokenized. And that's, we're basically created our own structure for it based on a cooperative. It's the oldest legal structure for a company. And almost all countries in the world have a sort of a version of a cooperative model. And you become a member instead of a shareholder, but the memberships reflects your shareholding and you hold the certificate to your ownership of an equity, and that is that enables us to digitize that legal framework. So it's a complex and topic to really. You need to have an integrated supply chain to make it work. So I wanted to adding a little bit to that. Thank you.
Thank you, Xander. Gabriel.
Thank you. Great to be here again. Yeah, no, I just wanted to add on the DeFi side, on the decentralized finance, that I really resonate because, for example, I'm in Latin America right now. I'm from Venezuela, and the banking system here is so bad that you really resonate with these decentralized open finance products because basically most of the people don't have access to the traditional banking products. But on the other hand, my question to all you guys is the battle between decentralization and the CeFi, still the centralized finance, right? I think one of the main challenges on DeFi is the security is still very fragile, vulnerable. You can still compromise the network, and it's interesting because we see around 90 billion locked in DeFi right now, more than 90 billion, and it's not going away. So, but on the other hand, you see the governments not only regulating this technology, but also trying to replicate some of the technology with the CBDCs, the central bank digital currencies, which for sure are going to happen, but I not necessarily agree that it's going to resonate with what people really want, no? The decentralization, the ability to participate in the whole ecosystem. But my question is, will be fully decentralized to one point, or that's too good to be true, or will be like a split, like two realities, centralized finance, decentralized finance, and everyone will try to play a role on that? And yeah, that's kind of like my take on that.
Thank you. I think Leonardo's next, and maybe a very good person to answer and respond to that. Welcome back, Leonardo.
Thanks so much for inviting me again. So I thought this is a really great discussion and a good place to kind of jump off from. I do think that the virtual asset space and traditional finance can coexist and will coexist. It really seems like a lot of what maybe virtual assets offer, they only offer it to places where they have less sophisticated banking and financial services. So if you live in a place where you can very easily, tap with your cell phone or with your smartwatch in order to buy coffees, you probably will never be thinking about something like a stable coin. But if you live somewhere where there's hyperinflation or something like that, then you might find the need to learn about this technology and how it works. But at the end of the day, though, I do think that centralized finance will always continue to exist. And one of the issues I think right now is that there's very few bridges that allow virtual asset space and the traditional financial space to coexist. There's few bridges between them that connect them. And I think that the growth of virtual assets has now created a need for regulations, and it is a real need, and it ought to happen. And if I would say logical and sound regulations that focus on sort of responsible and safe growth are enacted, then this should help to we should see a surge in the growth of decentralized networks and what they can offer, because of course some problems are for sure solved in a better way by private networks and private blockchains. But for those few places where there is a niche market and decentralization is the best solution, the organizations that are operating there still need access to bank accounts, and the unavailability of those bank accounts to many companies in the virtual asset space is a little bit, or it is quite cumbersome at the moment. And so hopefully regulations will help that, because I mean, it's the case that a lot of companies that are in the virtual asset space have a much more difficult time getting a bank account than weapons manufacturers or something like that. And so we really have to wonder if there is an availability and room for the industry and the banking industry and regulators to work together to figure out what really are the dangers? What are the technologies that can help to mitigate these dangers? And how do we get DeFi and CeFi working together to solve more problems? And I think regulation will be probably the first step, but those regulations should have some input from the industry as well, just to make sure that we don't end up crafting language that captures things in unintended ways that will end up handicapping a lot of potential growth in the future. Thank you.
Thank you, Leonardo. Sydney just kindly reminded us we actually have a few minutes left in the conversation and 4 hands raised, so we're going to have to go very quickly. John, I'm looking at you in particular.
That's fair. I have a tendency to ramble, so I'll very much keep it succinct. There are so many good points that are brought up, and I don't want to respond to literally everyone, but I will try my best to keep it on the brief side. I wanted to respond to both Rajesh and others about kind of like, what is this effect of having, networks of networks of networks? And it's important to remember that, the entire, infancy of what the industry that we're currently in, it's still very much early stages. And the reason why there's so many analogies and likening it to the early days of the internet is because it really does match up, the internet today is exactly that. It is networks of networks of networks, all the way down. And if you think of how the internet started, 1969, there was, 4 machines on the internet, but really those 4 machines were just access points to already existing networks within the concepts of universities. And so as we see projects like, the Cosmos project, Polkadot project, all these, systems that are trying to connect blockchains from point to point, I don't think there'll ever be one system. And this goes to what Gabriel was mentioning about, the connection between centralized finance, decentralized finance, and the decentralization of centralized finance. I think there's always going to be an amalgamation of systems that will do the right job for the use case that it's designed for. There's never going to be the one network that's going to resolve it all. Like I said, the internet just isn't one network. On the point, I'll just leave it at that. I think I won't go into it further more, but I think
Appreciate that, John.
Yeah, but I will happily go on for more. But
well, we want to keep you for the next roundtable as well. We will continue to dive into emerging technologies and the convergence of those, and what better use case and smart cities and the future of urbanization. So with that, Ray, McKinsey, and Roy, I'd love to invite you. Please don't take more than 2 minutes at the very most, and that would be like right at the edge of the next roundtable. Please go ahead, Ray.
Yeah, I just this is the deep end for me. I'm not an expert in finances, but one of the things that struck me listening to Matthew's presentation, and also responding to something that Alex put in the chat box, that all the possibility of this technology to offer improved liquidity, improved access, and all the rest of it also depends a great deal on mindset change. That is, we're not going to be able to do this with technology alone. Everybody is familiar, I think, with the various examples throughout history of purchases to close. General Motors bought up all the rapid transit systems in Los Angeles so people would buy more cars. We are seeing this kind of behavior on the part of some of the fossil fuel prospecting companies at the moment. So what we need to think about is also, what can we do to change the minds and hearts, as well as to put in place the infrastructure and the mechanisms that will level the playing field. Because it's not going to be enough if we just do the mechanisms. And that's all I had to say. So
thank you.
Pass it on.
Thank you, Ray. I was really tempted to respond to that by saying that markets tend to centralize, but I kind of held that off because, yeah. McKinsey, you're next. Thank you for your comments, Ray.
Hi, everyone. I'm McKinsey. I am a alternative, I specialize in alternative investments. And I've been kind of tasked myself with trying to decentralize alternative asset managers and alternative investments, because I think they are the key decision makers in all of this, in creating stakeholder capital. One of the things that was not mentioned, obviously we're running out of time, one of the things that's not mentioned is DAOs, or decentralized autonomous organizations, and what impact they're going to have in the governance and the regulations. And I think that is a silent lion that is going to really determine how our industry moves forward and the impact that we're going to make. So because of time, I'll leave it at that. Just something to think about. DAO, DAO.
Thank you, Mackenzie. Absolutely. And in fact, that's an interesting thing. And Matt, maybe I can invite you to comment on that a little bit, because they were all the rage, particularly in Singapore. And then it kind of, you know, with the regulation, it's kind of less of the case right now. What would be your closing comments on that?
The topic of DAOs is interesting from a practical perspective. So the way I first got involved with blockchain and tokenization was a few years ago when, as you say, Navroop, Singapore really was a hotbed of token launches and ICO activity. And the amount of sort of projects that were coming through Singapore at that time was really generating a lot of interest. Really, as an advisor, they were creating a microcosm of lots of different issues from a legal, regulatory, tax perspective. We still see them now. The number of issuances, I think, has decreased, and a number of my larger clients on the crypto side, I think, could perhaps be characterized as DAOs. I think where the focal point of DAOs seems to be from a practical perspective is what the technology can do is very wide ranging. But in order for a DAO to be able to work and operate within sort of practical system within current legal and regulatory constructs, there needs to be very strong governance mechanisms in place in order to make sure that they are operating on the right side of the line. I think those types of applications really do sort of push innovation to the limit, in the sense that I think they are responsible for a lot of the debate that we see around tokenization and the potential applications. The technology, I think, is pushing the debate forward, given that law regulation will always be responsive to an extent. But I think it's necessary to a certain point that states and stakeholders come together to try and help address some of these things proactively in order to make sure that sort of governance frameworks are put in place in order to help the operation of these types of applications. And I think there's also, importantly, going to be a market dynamic to this as well, whereby market participants actually contribute to the governance mechanisms, or helping shape the governance mechanisms to make sure that they are perceived to be fit for purpose. And I think in a lot of projects that has sort of been provided for within the governance structures through the voting that participators are quite often able to partake in. So things are still early. I think there's a lot of interesting activity in the space. And again, from a practical perspective as an advisor, there are lots of interesting projects out there. I think to some extent, developments and how things eventually settle will be a function of time. But at the same time, I think there's a lot of interest from different stakeholders and a lot of impetus to be working through these different frictions and different issues that we're experiencing. I think it's fair to say that everything is going in a similar direction ultimately, and over time we'll start to get greater clarity and sort of clearer applications, etc.
Great. Thank you so much. Thanks so much to all the hosts of this roundtable. John, Xander, and Matthew joining us from different parts of the world, from Europe, Canada, Singapore. So we're working across all time zones, and I would just encourage everyone to reach out and continue the conversation. Obviously, an hour is not enough, so we're leading into the next roundtable. And I think we have all the hosts in the room. I invite you to continue the conversation here. And all right, who is going first in the next roundtable? And thank you again for such an interesting conversation on digitalization, tokenization.
Thank you.
So Heidi, Reshma, Alvin, as well as, who's our fourth host here? Shri, of course. Heidi, would you like to get started?
Sure, why not? I have the Digital Economist background here, so it's perfect. Hello everyone, happy Friday. And my name is Heidi Kupari. I'm here in Boulder, Colorado. And I lived here for about 16 years. I grew up in the East Coast and New Jersey, and then lived in Manhattan for about 10 years. I would say I was kind of raised European in a way, because I'm first generation American. My parents were my father was born in Italy, and my mother was born in East Prussia, which was now Poland, in 1939. So both of them have rich histories. And my father was a subsistence farmer, and my mother was a refugee at age 5 from her town during World War II when she was 5 years old. And both of them, their roots coming over to the US are very, very alive in my family. I actually just got back from the East Coast visiting all of my Italian relatives who are all in New Jersey in different towns. Walking in the back door. I don't know if any of you know what that's like, but just walking in and sitting down and having some espresso. It was really a wonderful time to connect with my roots. And so this topic is really near and dear to my heart right now, because I saw a lot of, towns break down and then starting to build back up again, especially, during COVID. And I got to see I went to the Hamptons, I went to New York City, I was in Williamsburg, Brooklyn, I was all over New Jersey just the past few weeks. So it was really, it was great to have this topic, because I feel like, over the past year and a half, many of us have been so virtual, and sometimes it's hard to see what's on the ground. And so my topic, my 5 minutes, I want to talk about on the ground. On the ground is hitting the ground running, taking all this brilliant, everyone's coming up with incredible ideas. How do we bring that to the ground? How do we bring it home? And so urbanization is, I think, activating a group of people and a town around a common mission, and including all stakeholders. If you do not include all stakeholders, then we have the same fragmenting system, and decentralized finance and blockchain, and actually art and youth are a big part of my ideas on how to solve and address and create future cities. And so I'll share a little bit about my personal background other than the culture. I grew up asking why everything. I taught myself to read when I was 3 because I had this big book telling me why I wanted to read. So I was a very curious child. And throughout my life, I noticed that there's something that really lit me up, which was seeing what other people were passionate about and asking them to then try and helping them go do it, which is actually how I ended up here and helping Navroop launch the Digital Economist in Davos. Is really, that's been a common thread through my life. And so how have I done that has been through seeing systems. I'm a futurist and I'm a mom. And so one of our other roundtable guests, Francine Hardaway, I was talking to her and she's amazing. She's been angel investing for 25 years and more. She said, you can't be a mom and not be a futurist. And I said, can I use that? She said, yes. And that really is when you, you know, and if you're not a mom, you can also be a futurist, but there's something that comes with default that you see ahead in society, and you see what you can change for your children and other children. And so as I was going through my career, I followed my heart and then used my head to back it up. And that led me on the path of doing impact investing for about 17 years. I love the idea of matching capital and different asset classes, all different kinds of capital, with somebody's passion and purpose. And then I was trained as a wealth manager at UBS, focusing on sustainable, focusing on institutional accounts, 25 million and up, because I wanted to have a really big leverage point. I wanted to have a really big platform for change. And what I saw was that many people did not really realize that you could match your passion and your purpose and your impact and your financial goals. So I thought, I want to do that. So I set out to learn about all the different asset classes and how we could leverage for change. Worked on a $400 million impact set of funds, and since then have worked a lot with women and millennials, and then younger people. That's phase 2 of this story. And I was really listening. So the comment of on the ground and listening to people's passion, it stayed with me in all of my different travels. So when I was at UBS, I noticed that women and millennials specifically, who have the largest wealth transfer coming to them right now, who are very well positioned to transform everything if they're really engaged and active with their money. And so I was listening. Why weren't they more engaged with their money? I was noticing, tuning out, even the most educated women weren't tuning out when it came to the portfolio conversations. And the younger people really wanted to see different things happening. They wanted to invest in more groundbreaking, innovative investments. And with UBS, I found I couldn't really do those things. I couldn't really help them because at the time, because the deals, the private equity deals that they wanted access to, we couldn't actually recommend for anything under $50 million. But UBS was a big leader, has been a very big leader in sustainable investing and ESG. It just wasn't far and fast enough for what I saw was coming down the pike. As a futurist, I saw that they would need to get on board with making special platforms and special language for more people, more diverse people to get engaged with their money, using a different language that connected both to their mission and their heart and their wallets. So that was an observation I had, and I left UBS in about 2014 to start Anastasia Impact, which was about aligning money and meaning for people. So I was doing coach and concierge for mothers, daughters, families, inheritors, brothers, sisters, helping them, really embrace and let go of negative belief systems and everyone else's belief systems around how they should invest their money and get to their own truth. And so I helped move about $200 million into impact through Anastasia Impact. And that's how I met Navroop. And I was doing, that's how I met Patsy Dorr, who was here yesterday. We were doing some collective impact events through the United Nations, the White House. And because in 2015, I saw that all these different approaches to money were still too segmented, and it was still too much of a sector approach. And so I saw collective impact and the SDGs as moonshots, and that through collective impact, we could really go further and leap forward and achieve humanity's goals. And I had an epiphany in 2016 when someone asked me, what would I do if I had 1 year left to live? It really hit me in that moment that I would need to do something so crazy, so radical that I didn't care what anyone thought. And I would want to spend my time with my kids. And I want to do something that might not happen if I didn't do it. And what was that thing? And it hit me right then and there. We are not listening to our children's ideas on how to solve the world's problems. they have such great imaginations and they were born into technology. And so I set out to do an experiment called Dream Tank, which turned into a 501c3 social enterprise accelerator for youth to address the sustainable development goals with mentorship, technology, and so on. While I was birthing that, I really saw this real big gift and desire to bring together the mountain movers of the world who could sit down at a table, even with the kids or without the kids, but getting them sitting together. And I learned it at Acumen. This was very powerful. When we got Exxon and the World Health Organization and a Tanzanian bed net manufacturer to sit down, and Sumitomo in Japan to all sit down together and say, how can we solve this problem? Everybody's voice is welcome. And so I really
let's pick it up if that's okay. I know we offered 5 minutes, and so we're in 12 minutes right now.
Oh my goodness.
Sure.
Oh my goodness. I'm so sorry. I got lost. Sorry. So my topic today is about all of those things and about how art and youth, and my father's an artist and I was in the art world for 5 years along the way, how art, youth, technology, and mentorship can transform urban centers and the world.
Awesome.
Thank you.
Thank you, Heidi. All right, so we got Alvin, Reshma, Shri. Who's going next amongst the other three hosts?
I'll be happy to go next. Pretty great points. So, future for urbanization from a different perspective, digital technologies.
I think your audio is really bad right now. Maybe I can get back to you if you want to try joining from a different device, and I can request Reshma and Alvin to go next.
All right, yeah, I will try.
I will go next, Navroop.
Welcome,
hey,
Alvin.
Good morning and good afternoon and good evening to everyone. My name is Alvin. I'm based here in Singapore, so it's about 11:15. Really excited and really thank the Digital Economist for this, opportunity to share with you. I think, all of us talk about the future of urbanization, and that's exactly kind of what I do in my day job. I'm the Vice President and General Manager for Johnson Control Digital in APAC. And one of the key things that, really excited about how, we think about this topic of future of urbanization is really around a single strategy for sustainability and digitization coming together. So that intersection point, and for me being a sales leader and a business leader, I'm beginning to see a lot of our customers and a lot of the companies that we deal with are now asking the question of, do I really need, or can I have a single strategy for sustainability and digitization? And this is becoming real, that it is no longer a separate strategy, but a singular strategy. So as we kind of think about, what the boardrooms are facing, right? I mean, you have a chief digital officer, you have a chief sustainability officer, but now boardrooms have a huge opportunity to address this disconnect, whether do they function in separate, but to really combine and align their sustainability and digitization strategy. And in the world that we live in for real estate and property portfolios and real estate and buildings really consists of about 40% of the global energy, right? So that footprint, so the buildings are the culprit. And at the same time as there's been a big contribution to the carbon footprint, it's becoming important for a lot of these real estate companies to really rethink about both digital and sustainability coming together to really drive that future of urbanization. So really, sustainability is no longer an opt-in for the world's company, right? It is really part of the DNA, and the major theme of sustainability is really around decarbonization. And so I think one of the key things that we think a lot about in Johnson Control is really around how do we help companies really align that strategy, right? So the job of aligning sustainability with digitization might sometimes seem daunting, despite its obvious benefit. Companies will need to rewrite their digital strategy with sustainable goals as their intended outcome. So they become that forcing function. But then there's this extra complication, the sheer diversity of the system and the volume of data that is happening in today's building. And the average building owner runs a multitude of systems from vendors, from various vendors and technology to spaces and asset. This becomes really complex. And then now you add on ESG goals, you add on EHS related key performance indicators. This is really driving, a lot of this boardroom executives rethinking about their entire strategy. So companies should really start by defining where they are in that journey to start with, defining their destination. And as a result of that, what they want to do is to really think about this as, with all this data that they're collecting, moving from that whole reporting to the management process, creating that single pane of glass to really drive, everything they do. So in summary, as we think about the future of urbanization, sustainability is a core topic, digital transformation is a core topic, but really linking sustainability and digitalization, while it seems complicated, it's actually much natural than addressing them separately. So, I will encourage everyone, listening in and in this discussion, really welcome and invite all of you to really think about how we can really create that, not just the overlap, but create a singular strategy of the intersection between digital and sustainability. Back to you, Navroop.
Thank you. Yeah, I just want to hand over to Shri and Reshma here.
I can go next because I feel like, Alvin, you've set the stage very nicely for me. I also feel truly that buildings are the single most cost-negative carbon wedge that you can put into any economy, especially emerging economies with a large growing building footprint, and urbanization, that's the biggest thing you can do. Good morning, good evening, and good afternoon, everyone. I am an architect with a mission, and my mission is a zero carbon built environment that drives equitable wellness and resilience. My name is Reshma Singh, and it's been a real honor for the past 10 years to be in the field of sustainable energy in buildings in the US Department of Energy's National Labs family. Lawrence Berkeley National Lab, where I am, is nestled in the hills of UC Berkeley, California, and we are celebrating our 90th birthday this year. We are a $1 billion science and technology powerhouse. We have 14 Nobel Prize laureates, and my 3,500 colleagues are tackling some of the greatest scientific challenges of our time, from genomics for human health to discovering 16 new elements in the periodic table to combating climate change. Berkeley Lab is third-party neutral. Our science is open, ingenuous, and humanitarian. So our team at the Building Technologies and Urban Systems Division, which is aptly called BTUS, which is where I work, it focuses on advancing smart buildings, energy efficiency, developing clean energy generation and storage, exploring options for reliable electrical grid, improving air quality, reducing emissions, examining sustainable transportation systems, all of which feed into today's panel, for which I thank Navroop and team on the future of urbanization and the convergence of digitalization and sustainability. So I usually like to talk about a three-dimensional vision. And I'm going to share one screen here, and I hope that resonates with you. So this is our theory of change. A 3D vision, number one, decarbonize to radically reduce emissions for a zero carbon built environment. Second is digitalize, which is to smartly connect buildings, distributed energy resources, people, and organizations. And perhaps most importantly, democratize, which is to provide equitable wellness in a resilient living environment. And to enable this 3D vision, we have 5 levers of action: technology, financing, human capital, policy, and research and development. So today I'd like to share an example of each in the research and development space, which is where we're working. And we collaborate with both the public and the private sectors. And maybe this will get your wheels turning to see how we can collaborate as well. So let's start with democratize. Through the lens of a project that we are leading right now, it's called Microgrid in a Box. So we are working to democratize energy resilience. Our microgrid in a box is a plug-and-play solution with standardized modular architecture. It uses Berkeley Labs' unique DIRCAM software that provides detailed operation scheduling and supervisory control of distributed energy resources, which could be solar, battery storage, EV charging, etc. It not only enables energy access, providing life-saving devices to underserved communities, but can slash the energy bill in half to cost effectively achieve off-grid islanding without the need for dirty diesel generators. So we are looking for partners that can deploy this microgrid in a box in underserved communities, as well as campuses and even the military sites anywhere in the world. Next, let's talk about digitalize, and this is through the lens of our international partnerships on built environments. So as you know, climate change requires and demands planetary action and partnership with emerging economies, which are large emitters. And that needs transformative digital solutions. And these solutions include data frameworks in countries that don't have data, in our AI-enabled digital twins of the exploding urban environment, and digital controls of new energy technologies so they can deliver what they promise. I'm sure Alvin agrees with that, with the JCI paradigm. An example of such a partnership is Seabird, a US-India bilateral partnership that we led that was conceived through an MOU between President Obama and Prime Minister Singh. And this is now being forwarded through the latest administration. In Seabird, this was a private public consortium that we pulled together. We converged 45 research, industry, and civil society organizations with over 100 experts from both countries, US and India, to help accelerate building energy efficiency technologies and policies. So we put forward at least a dozen new software tools, technologies, and test beds. So let me give you an example of a technology co-developed between industry and researchers on both US and India side that neither could have done by themselves. So this is a grid responsive building smart hub called iSpace. So Berkeley Lab developed the integration software and communications to have the building respond to grid price signals. And our research partner, IIIT Hyderabad, did the 3D printing and hardware integration. And Honeywell, our industry partner, provided insights for functions and features for the product. So iSpace is an example of a truly leapfrog device that was demonstrated in both US and Indian test beds. And this provides both personal comfort and peak load reduction for massive energy and cost savings. So expanding from Seabird this year, we are looking at expanding international programs in ASEAN and Africa this year. And we're looking at a moonshot new bold program, buildings operational leadership through digitalization. And this is specifically for women to empower them for digital leadership in the built environment. So I hope you will join me for that. Thirdly, let's talk about our final aspect, probably the most important one, decarbonize, through our Impel program. So we just started Impel 2 years ago in 2019. This is a climate tech to market program through which we have fully funded the training of over 100 early stage buildings innovators, impelling them towards opportunities for federal and state funding and towards investors and accelerators. For example, some of our innovators are looking at 3D printed thermal energy storage. Some of them are looking at microalgae-based latticed windows. Some of them are looking at use of drones and machine learning to scan buildings across entire neighborhoods to fix the ones which are leaking air-conditioned air. 50% of our innovators are women or people of color, and already 10% have won awards, fellowships, and follow-on funding. So this season, we are opening our next cycle for entrepreneurs. So ask them to apply on our website, impel.lbl.gov. We're also onboarding, and this will be of interest to all of you, a new mentor advisory panel for Impel. So do reach out to me if you'd like to grab a seat to build out Impel, the world's first buildings combinator. I'd like to thank Navroop, Heidi, Shri, Sydney, and the Digital Economist team for creating and inviting me to this amazing platform. I'll drop a couple of links on the chat and look forward to your questions and comments. Thank you so much.
Amazing. Thank you, Reshma. Over to you, Shri.
Thank you. Great points, Alvin and Reshma. I would like to talk about the future of urbanization from a slightly different perspective in a broader context. I'll talk about the role that digital technologies are going to play going forward. A little bit of my background, I'm a PhD in environmental economics. Early part of my career, I worked in the area of transportation systems and their applicability to climate change solutions. But for the most part of my career, I've been working in the energy industry, and I'm currently working for Department of Defense, working on energy resilience projects for the installations across the country. So the topic is future of urbanization. I think it's well acknowledged and well accepted that the pace of urbanization is growing at a pretty frightening pace. If you look today where we are about the world, 55% of the world's population is urbanized. And come 2050, we are looking at that increasing to 70%. So which means 15% in another 20 years is a pretty scary pace of urbanization. And this is going to bring a whole set of new challenges, social, economic, technological, sustainability related. But also we need to keep in mind, it's with the pandemic going on, right? This is going to add an entirely new dimension to all these set of challenges. And digital technologies have always played a critical role. I think the whole challenges posed by urbanization has led to a lot of debate and work in the area of smart cities. And the digital tools have a great role to play there, and they have been over the last few years. For example, if you look at Beijing, they have been solely responsible for reducing their air pollution just by tracking their pollution and by identifying the exact source of the pollution by 15 to 20%. Similarly, controllers, smart controllers, digital controllers, they have a potential of reducing the water consumption by as much as 15 to 30%, right? And when you talk about water consumption, you're not taking into account the co-benefits such as electricity costs and reduced electricity consumption. Even for instance, even as I speak, we are working on a project trying to secure defense funding for a project that involves smart digital controllers for the river intake system for one of the Army installations. When we anticipate that that's going to help reduce the water consumption by 50%. But coming back to the whole issue of smart cities, right? I think that is, I like to make a point. I think that is a conception that smart cities translates into being sustainable. And I will say not necessarily so. I think recognizing that people are talking about another new concept, which is called smart sustainable cities. And what they call, in other words, is smart urbanism, right? And the reason, and there have been, the challenges with smart cities and linking that to sustainability, there are a set of assumptions which are quite deficient and there's some misunderstanding. But one of the main reasons why smart cities doesn't necessarily lead to sustainable outcomes is that the linkage between smart goals and sustainability targets, smart solutions and sustainability targets are a bit weak. So what I see going forward, right? I think there has been focus on blockchain, as a climate tool. And a couple of years back, I was actually collaborating with another colleague. And actually, interestingly, he was part of the President Trump's energy panel, from where he subsequently unpredictably resigned. So he was working on this concept of tracking carbon emissions in trade, right, through import and export of goods. And I think that can be, the problem is that that solution hasn't scaled up, and I'll come to that later why, the reason for that later why. But going forward, what I'm seeing is the focus is going to shift when you talk about urbanization. The focus is going to shift slightly from the broader basket of digital technologies to datafication of the industries. I think it's going to be all about big data analytics, big data technologies, because I think that's what is going to help, and that's what is helping the urban planners. Because there's an entirely database scientific knowledge based, and a lot of the cities are focusing on datafication as a tool for for managing their urbanization. I think the best examples in this case, and I unfortunately can't get into the details for a want of time, but the best examples in this case are the case of London and Barcelona. All right, so and even if you look at the U.S., I think Boston offers a good case study. They're looking at datafication as a way of managing their traffic system. But that's a challenge. I think there is a challenge, and the challenge is with there's an investment gap. And this investment gap actually stems from the fact that there has been a steady decline in investment in climate technologies over the last 10 years. And predictably, as we all know, it was definitely it has happened over the last 5 years when the previous administration took over. But even if you go beyond that, there has been a decline in the investment in climate technologies over the last 10 years. And what implications that has had is that has led to an underinvestment in ICT technologies as a tool to fight climate change. Now, if you look at investment in things like precision farming and, again, using blockchain for various applications such as reducing carbon leakage, carbon emission through trade, etc., the investment hasn't been as much as one would have thought would have happened 4 or 5 years back. We all know the possible solution to this. I think that there's this whole world of sustainable digital finance, and there's whole world of ESGs. And I don't think I need to talk about ESGs here. It's a it's a fairly crowded topic, and everybody has a point of view on that. But what I'd like to stress on is, apart from technology startups that that invest into digital technologies or data technologies for climate change, there's also another set of organizations that needs financial support, and these are the small and medium enterprises. I think a lot of the ecosystem for this, big data technologies for fighting climate change, or the broader basket digital technologies for fighting climate change, is also going to come from small and medium enterprises, and they need a strong financial ecosystem for that. So on that note, I will finish my comments, and thanks.
Thank you, Sri. Thanks so much. So much to unpack. I feel like you just bombarded us with a whole lot of things, and I think this is going to go beyond this roundtable as well. So thank you for that. I do know, Deepak, you said you couldn't find the hand raise function, so I'd love to invite you for a couple of minutes, and then followed by Devin to share what you'd like to share with us today. And good to see familiar faces again. Welcome back.
Thanks, Navroop, and so thanks everybody for their comments. So I just wanted to mention two things here. One is, when we are talking about urbanization and use of digital technologies, I think there are two different types of urbanization that we see. So one is, obviously, there's a migratory urbanization, so people who are coming from a rural area to an urban area. The other one is an in-situ urbanization. So for example, in Delhi itself, I mean, even today, a lot of people may or may not realize that even many of those living in Delhi, that Delhi itself has got a whole lot of villages. Even today, they are technically called villages, okay? And so there's a lot of in-situ urbanization also, which is happening around the world, I would say, but especially so very rapidly in many developing countries. And in those scenarios, I think there are two major challenges. One is the way this whole thing is coming. So for example, in Delhi, the villages do not come under the Delhi city's master plan. So the villages have sort of, they are sort of concretizing and doing other things in a more organic manner, using all sort of materials and the way things are happening there. And then retrofitting any technology in that type of environment is quite a difficult thing, both technically, but also very importantly in terms of governance and regulatory perspective, because they have different type of regimes on that. And the second thing is, whenever we are looking at digitalization, I think we also need to be mindful, especially in developing countries. There's a huge challenge in terms of not just the finances, but also in terms of grid supply. If you don't have power supply, sorry, you just can't do enough of measurements, storage, of tracking of data, and many other things. So that's another thing that oftentimes people do not really pay sufficient attention towards. people do focus a lot about the sort of, okay, putting this digital technology and something paratroops over there and you install different things. But ultimately, without the reliable, consistent power supply on the grid side, none of these things actually sustain very, very well. And the last thing is that unless people are involved in doing these type of projects, so that they also see that there's an ownership and there's a commitment towards the shared values of the system which is being installed. Otherwise, people might be tinkering on the edges. And many times somebody might take out a small cable or a small equipment or something like that, and then the whole thing may collapse. So let me just stop here. Thank you.
Thank you, Deepak. Thanks so much. Devin, you're up next. Good to see you again. And I know Mike is also searching for that raise hand function. Apparently, Zoom hasn't made it very intuitive. I keep kind of posting the chat function. If you look at the reactions at the bottom right, you got to find it down there. So it's a two-step process. But Devin, over to you.
Thank you. Thank you. You got to do a little bit of digging. You got to really want to raise your hand. So for those of you who did not meet me yesterday, I run a universal basic entrepreneurship platform and with locations in Austin, New Orleans, and New York. Before I started Huntobot, I worked with New York City mayoral government, the CTO's office, and City University of New York. And we created a program called the CoLab program, which I think is very specifically relevant to this situation. So we do this with governments all across the country and the world, but please feel free to rip this off. This is all open source. So this program was had 8 steps. We would engage community board organizers within a local community in order to understand what their problems were. Not what we thought their problems were, but what their problems were. We would identify those problems and the problem solution gap, because there's tons of grants in any given city to solve these problems. Is there any money that can be associated with solving this problem, and where were those gaps of solution to money? Then we design an RFP for that solution, and we would then, and this is where I would come on board, I would incubate startups from underrepresented folks in those communities to solve those problems. Now, my program is for underrepresented people, and I found out very quickly that I didn't want to bother with going out to raise money or helping them to raise money, because it became Shark Tank. Nobody wanted to invest in underrepresented. They always had a really good excuse, but they never wanted to. So I flipped to a bootstrap model where it's all about facilitating revenue generation for them. So what we would do is we would choose the best incubated solutions, and then the city would connect those solutions to the procurement within the departments. And we would pilot a $20,000 pilot with those programs. That broke the glass ceiling of those startups with their first customer and solved the actual problem that the communities had. So I love this whole concept, and I find it's really helpful in raising capital for the startup in a bootstrap environment. It leverages the long tail of the community to solve these problems, regardless of what they are, right? And it does double duty. I hate spending $1 to make $1. I like spending $1 to make $5. Do $5 worth of impact with $1. And this raises the generational wealth within the community. It solves the actual problems that the government is trying to solve. And you have companies who then can exponentially drive that solution across other cities. So that's all I got to say. But that's basically what I wanted to talk about. Please, anybody who's in the municipality, rip this off or contact us if you want us to run it for you. But you don't need us to do it unless you just want us to. So.
Thank you very much, Devin. We have Mike next, who had sent me a note saying he can't find the raise hand function either. So Mike, the stage is yours.
Are we allowed to respond to each one, or if somebody makes a comment?
Yeah, Heidi, let's have you next after Devin, okay. And then we'll go to Ray, if that's okay.
Yes, yeah, thank you, Navroop, and thank you, everyone. A really interesting conversation. I'd like to cycle back to something Shri mentioned, and forgive me if I'm misquoting you. You said that smart cities are not de facto, they're not automatically more sustainable or more carbon neutral. And I'd like to stress, however, and I'd also like to refer back to something we talked about yesterday in terms of the insurance industry and risk management, that we have a huge opportunity as cities and buildings become smarter to proactively prevent risks, prevent certain cost-inducing loss events, certain energy efficiency loss events. And I think that this is something, you're absolutely right, it's not going to happen by itself, but this is something that deserves a very keen focus, that as we begin to harness these technologies to make cities and buildings smarter, that we have to, you know, keep our eyes on the prize to see, you know, what is this all about? It's not just about you know, having you come home and your lights go on automatically. I mean, who cares? I can turn on a light switch. But if those technologies can you know, incrementally save energy over the course of a year, and if those technologies can tell me, and we've had this, I'm located in Germany, we've had this incredible flooding here. If these technologies can warn in advance of potential loss events, I think they're huge gains for smarter cities and smarter buildings to be had. And so that, I mean, that's just what I wanted to point out, that it's from a policy perspective, it's something that we can talk about, and as the digital economist, we can, you know, raise our voice toward for the future.
Thank you, Mike. All right, Ray and Heidi, and just a quick note, we have around 12 minutes left in the roundtable. And so if you are looking or still tinkering with whether you or not you'd like to come on stage, please raise your hands now so we can invite you to the floor. All right, Ray and Heidi, you guys are next.
I wanted to raise a question that's also been raised in some way by Avinash in the chat box, which is the whole question of, I guess you could say, systems thinking, or at least big picture interaction consideration. And I'm going to take as an example the kind of smart building that Reshma is talking about, where energy control is very important. Are we thinking, when we do that, when we design that, what happens when, let's say, a ventilation system starts up and creates, let's say, a sound event, right? And how are we dealing with that aspect of the acoustic implication of whatever the smart building does to provide better energy control and better energy efficiency? Are we looking at those sort of ripple effects, which may not be directly energy related or green related, but are related to the whole notion of urbanism? What is it like to live in an urban environment? What is the conviviality that we have available for people and their interactions, and just overall comfort levels, not just in one area, but in all of the areas and the way that they interact, which is a huge problem and a huge issue to tackle. I mean, I find it mind-boggling, but I find that very often we forget to ask those questions. So I'm throwing that out there.
Thank you, Ray. Appreciate it. Thank you. Always excellent contributions. All right, Heidi.
Yeah, so I was, what Devin, what you were talking about and what everyone's been talking about here, it really struck me as a way to really kind of simplify and take action. In this group here alone, if this group here was a task force for the future of urbanization, holy wow, you know, I just thought, what a mind share in the room, what mountain movers. And so I love this approach, Devin, because I also really believe that you know, the best ideas often are coming from the most underrepresented people. And if they're not funded and they're not MBAs that can have a financial projection and can get investment ready the way that the investment community has wanted some of these ideas to get ready. So between a process like yours for every city, and then the Digital Economist advising and creating these groups to actually back up the plans and implement them based on blockchain, because blockchain is the way that we're going to empower ourselves and each other. And imagine that artists who usually create beautiful works around can have a QR code anywhere you see art, anywhere in the city, and you could send them money, right? So when everybody has the ability to receive something for what they put in their ideas, no matter what phase their ideas are in, that's where we're going to see major change. And so I just thought it would be interesting to just kind of weave that web of saying, I see some action here. I see, you know, Devin's approach combined with, you know, some of the youth, bringing some of the youth to the table, combined with the Digital Economist as facilitator for blockchain-based solutions with cross-sector leaders, as such a knock out of the park, and pretty good work for a Friday. So I just wanted to say, wow, everyone here. I mean, what Reshma was saying, to build that, you know, all of those applications, but starting with these processes of what each urban center needs, and then bringing those tools to create what they need and the dream they want to create in their city. So thank you.
Thank you so much, Heidi. This is fascinating. Wow. I know Govinder's here. I actually love to call him upon stage. And I know Deepak, you requested for a small comment, and then we'll just have closing remarks from the hosts. We're just 10 minutes almost left in this roundtable. That's pushing it. So
thanks, Navroop. Really a pleasure to listen to everybody. I just have a quick remark, a little bit related to what Heidi just put on the table, and then a question for the roundtable experts over here. My quick remark is, you know, from somebody who comes from a very, you know, deep and wide work in technology, and particularly in blockchain, a lot of my entire work spearheads with blockchain. Even as recent as this morning with a client, I was trying to ground the principles of technology, blockchain in this case, into principles of social sciences and economics. I'm not the expert in the other two fields, but yeah, to some extent, you know, technology fixes things, but technology has to be grounded in social sciences and economic sciences, which is a lot of the expertise that is discussed in, you know, in the forums and, you know, the work that Navroop and TDE does. So I just wanted to kind of caveat the discussion around that. It's not going to be, tech is not going to be the elixir to everything. Separately, my question is a little bit to what Deepak you raised around the existence of villages within cities, like it is in Delhi. And I know that from having grown up and studied in schools in Delhi, and there was a village right next to our school, which incidentally was Khadarpuri. I chatted the background on what Khadarpuri is about, which I'm sure will be so interesting and probably new to many of you. But the question around that is, when we look at the work that has been done on the flow towards urbanization and the concept that, you know, if you build airport and cities build around that, and yes, there are huge numbers on how rural populations are moving towards urban centers. I want to raise the inquiry that has there been a little shift of that in light of the pandemic, where people actually have moved out from urban centers. And I live in Dallas, actually in the suburb of Plano, which is a city in itself, even though it's a suburb. But New Yorkers are moving over here. Cities, you know, San Franciscans are moving into suburbs of Texas and other parts of the country. So is there a recalibration on what we otherwise have made a clear demarcation and in favor of urbanization, and all the innovation, all the R&D is going towards urbanization and smart cities? Is it relevant to recalibrate and revisit which way that flow is really going, particularly in light of the pandemic.
Excellent. Yeah, very, very thoughtful and provocative, Govinder. I know for myself, I've definitely made a choice since the pandemic. Deepak, over to you. Just very quickly, we have only a few minutes left, and I want to hear from the host before we move to the next roundtable.
Sure. So what Guri just mentioned, so yes, definitely, for example, in India, last year, we did see a massive reverse migration, as it was mentioned in the media that time. Of course, many of those people are now coming back into the cities, but some of them have stayed back in the villages. And I think with increasing digitalization, there are opportunities for a lot of people to actually work from wherever they are and wherever they can. And especially in the IT industry in India, this is something that we have seen, that whole lot of people are actually working from their hometowns or smaller towns, from wherever they would like to do, because they don't really have to necessarily be in the office. Now, let me just come to what I wanted to mention. And what I wanted to say was this, that right now we are talking a lot about technology, as Kuri was just mentioning, that there's a lot of focus on technology, and we are not really talking so much about the socioeconomic context and the political economy, and we are not really talking about the people, frankly, much. So unless we talk about smarter citizens, I think this whole thing about smart cities is not really that useful. And personally, for me, I would say that I would rather live in a dumb city with smart people than otherwise. Thank you.
That's so true.
That's a nice quote.
Yeah,
let's get that out. Great. Thank you so much, Deepak. Excellent comment. I'd love to invite Alvin, Shri, and Reshma for some closing comments. Heidi, we had you. So unless there's something you'd like to contribute, I would say I think that would be the closing of this roundtable, and of course the conversation continues.
Well, I wonder if on our Slack, we can just set up like one channel for this topic, because I would love to continue this conversation.
Let's do it.
Folks. Yeah, that would be amazing.
Let's post in the chat function as well, if another forum or LinkedIn, whatever is good for everyone. I see a lot of action in the chat, so take this opportunity to connect as well. Thank you, Heidi. Over to you, Alvin.
I would say, that there's a huge and strong, listening to everybody, a strong incentive for us to really rethink, right? And I agree that it's not about technology, it's about people and process. But I think, in general, companies and customers of ours, they need to act quickly, and it's not just to reduce the number of boardroom seats by one, or they need to kind of really think about combining that chief digital officer, chief sustainer, and putting them together. So I really believe that the intersection is happening, and that's going to be the driving force.
Thank you, Alvin. Shri, would you like to go next? I think you need to unmute yourself.
Yeah, sure. Thanks, Mike. I'll begin by responding to your question. Smart cities, yes, there has been work and research done looking at the causal relationship between smart cities and sustainability, and it has emerged that smart cities don't necessarily lead, not in all the cases, don't necessarily lead to sustainable outcomes, because the smart solutions are not aligned to sustainability goals or sustainability targets. So so the second point that I would like to make is, I saw a comment in the chat box about there being a need for rethink around smart city models, and I completely agree, because given the pandemic, I think the smart city model was broadened to encompass the health elements of the urban planning. So there is a complete need for rethink around the smart city models. The third point is, I think that there's a lot of discussion on digital technologies in built environment, right? And no doubt buildings are one of the major sources of greenhouse gas emissions. But let's not forget that they have been overtaken by the transportation sector, right? Today, if you look at the greenhouse gas emission, the transport sector is the highest emitter of GHG emissions, at least in the US. And I think there is a need to look at the whole big data technologies and their applications in the transportation systems, and particularly also in the wider transportation sector, because that's going to be very critical for the future of urbanization. Thanks.
Thank you, Shri. Very succinct. Reshma, over to you.
Thank you, Shri and Alvin. I'll just like to wrap up by saying that in 2020, we've had a sharp focus emerge on health and resilience. Resilience, obviously, because we've seen the number and frequency and extremity of all the events, climate events, going up like crazy. Like right now, we're sitting in the middle of wildfires. I was in Mount Shasta last weekend before my son started high school, and we were basically all sitting indoors because we couldn't even head out because of the wildfire smoke. So it's here. Every single person on earth is facing it, whether you be, millionaire or somebody with, a small hut. So, and the other sharp focus that's emerging right now, which really we need to hone into, is what 2020-21 has shown us with the COVID crisis. And I feel like the 6 foot 2 meter rule for social distances is nothing but a way to provide equitable space and clean air for every person on earth. Again, it doesn't matter if you're a millionaire or a person sitting in a hut. Health equalizes everybody. And that's a starting point from where we need to start our digital transformation process.
Thank you, Reshma. Very, very succinct. And I just want to make a couple of comments here. I just had so many questions actually, but then we also have experts in the room, and I didn't want to interrupt. But when it comes to urbanization, it really is a melting pot of everything, right? All these factors and everything that's happening. Whether it's working with data, and our next session is actually this is a great segue into the next session on that, which is on the future of work, and all of the factors combined, whether we're looking at transportation or urbanization, how people move between different geographies, right? There's a lot of work that the group I am with at MIT Connection Science have done on urbanization, something that I'll welcome everyone to explore on how we can use predictive analytics to build better environments for humans, ultimately for human outcomes. And just in conclusion, I think just the focus on that in this particular roundtable has been tremendous, and amazing conversation and everything that it contained together, right? Whether it's transportation, mobility, or all those other aspects. So with that, I think we have most of the hosts for the next roundtable in the room as well. I see Juan, I see Beth, and Mike is here, of course. So I would love to thank you all for joining us for this very interesting session on urbanization that concerns all of us, even if you moved out of the city during the pandemic. I sure did. And I'm wondering if you want to live in cities again. But again, I think the digital technologies provide that opportunity, right? That optionality, which wasn't available before. And that excites us. That excites us massively. So thank you, everyone. And we welcome you to the next roundtable, having said that. All right, so Yvonne, Beth, Mike, and Samira, over to you, whoever would like to go first.
Thank you so much.
Thank you, Heidi. And sorry, I just wanted to say one round of thank you to, by name, to Heidi, to everyone else, Reshma, as well as Shri, as well as Alvin, who just joined us for the last one. So thanks again. Over to you, Mike.
Thank you. Bye, everyone.
Thank you, Heidi.
Thanks so much. I just wanted to make sure, is Samira, are you with us?
I believe not yet, Mike. We can.
Okay. Well,
please get started.
I'm Mike Dury, Chief Content Officer with the Digital Economist. I'd like to hand over to Beth or Yvonne to start. Whoever would like to go first. Yvonne.
Hi.
Wonderful.
Hi, hi, Mike. Hi, Navroop. Hi, everybody. Been really great conversation so far, and really great to be here having these discussions, and really looking beyond stakeholder capitalism. So I'm happy to be here. Thank you for having me. A little bit about me. I'm a change management strategist. I am a change leadership advocate and the founder of the Change Leadership. And the change leadership essentially is that we help professionals and organizations to lead and respond to change better and faster, most especially in today's disruptive business environment. So why did we start the change leadership? Why do we need another organization? What I found, in the last 20 years, as a change management strategist, working in the area of change, working with management consultancies, I started to see the effects of failed change initiatives. And it often went beyond, say, the loss of profits or shareholder value. There was always the impact to employee financial and mental well-being. There was the impact to the community at large. And when I looked at this, people, or when I talk about change leadership and I say, oh, we're helping organizations to lead and respond to change better and faster, the question could be, why would we want to help organizations or shareholders be more successful? But what we found is that because the success of an organization is often tied to the community at large. So our belief is that when each part thrives, we all thrive together. So when employees, suppliers, partners, community, and the environment thrives, shareholders will thrive as well. We all benefit together. So we often do this, or how we deliver our mission is through our annual Change Leadership Conference, where we bring in industry leaders that are leading and driving change in today's fast-paced business environment, whether through AI, blockchain, fourth industrial revolution. We create content on leading change in today's disruptive environment. And we have a change leadership course that we use to help professionals and organizations to gain the skills and competencies to lead and prepare for the future of work. So being here talking about the future of work is really exciting. So when we look back at the pandemic and we look back to what does post-pandemic look like, I want to look at two effects of the post-pandemic. And one of them is the accelerated future of work, where we've been, prior to the pandemic, we've been discussing the future of work, and it was slowly evolving prior to the pandemic, but now it's a reality. Some organizations were keen on it, and this was some discussions we're having in the Change Leadership Conference prior to 2019. But what we found with the accelerated future of work is that those that could pivot, those that could focus on human needs, those that could employ non-technological skills to lead and manage change or to leverage technology or digitization, those were the ones that significantly raised their chances of survival and success. So yes, even though technology was important, when we looked at, focusing on human needs and organizations who thought, what do the people really need right now? How can we meet human needs? Those were the ones that succeeded. Those were the ones that remained. Whether it be restaurants that were like, how do we support people now? What are people looking for? Those were the ones that succeeded, or those ones who might be even AVs, like we had our conference and we had this AV strategy organization that had to really pivot and say, what do our customers want? When they focused on the needs of what people wanted, the human needs, then they're able to pivot, leveraging technology. So that was one of the effects of the pandemic. Another effects that we're seeing post-pandemic, but because of the pandemic, is what is now being termed the Great Resignation, or perhaps the Great Awakening, where a record number of people are quitting their jobs. We're hearing about it in the US and even in other countries as well. So what the pandemic has done is created a mindset shift, which has led people to start reassessing and realigning their values. So for me, the Maslow's intrinsic value comes to mind. Again, where people are they're thinking about self, and organizations need to also evolve to start thinking about what do people want. So again, even though we're moving to technology focused or digitization, and that's what the future of work is about, there has to be that focus on people, because if not, so people feel I have the right, I have my feet, my leg, and I'm moving. You know, with the Great Resignation or Great Awakening, we're also seeing people assessing their options. They're becoming more fearless, focused on their values. And people, as well as organizations too, in the face of stakeholder capitalism, are beginning to redefine what success looks like. So prior to the pandemic, what someone would consider as success is not necessarily what we consider as success right now. So that again are things that the pandemic, two key things it's affected, but they're more for sure. But I just wanted to raise those two. So as we consider the some of the considerations and challenges that I want us to look through the stakeholder capitalism lens, because we talk about stakeholder capitalism, is that let's think about, you know, that yes, there's technology and digitization, which has enabled remote working being a key component of the future of work. However, as organizations make the decision on what is most optimal, or what the best strategy is for us going forward, a human-centered stakeholder engagement, you know, now focused on engagement, will be very key. And when we talk about stakeholders, we're not just talking about employees. We're looking broadly at what it means to engage as stakeholders. Some of the consideration and challenges is first, I'm going to share just four. First is they're going to have to think of, what does this mean for employees? Employees are undoubtedly the greatest resources that organizations have. So they're going to have to start thinking, who may want to work from home when we look at something as simple as remote working, and who wants to come into the office? So making sweeping statements such as 100% working from home could be very presumptive, or maybe 50% coming or 4 days a week, 3 days a week. How are they engaging with stakeholders such as the employee to see what is key, what is most important? They're going to have to start to think about, or we as a whole need to start to think about, what does all of this, even remote working, mean from a social responsibility perspective? What does working from home mean for vendors or partners or surrounding communities who have, you know, whose long-term strategic goals or business models have been built around foot traffic for the businesses that they serve, or, you know, once served? I remember going with a friend to a mall, and this was in the States, and we got into this mall. You know, if anybody has been into a mall in the States, that you see that is dying, or even around the wall, there's this airy feeling there in the mall. And as I went around the mall with her, there were so many shops that had closed down. And she would point out to me, you know, when I first had a baby and I felt all alone, that was where I used to come, and I used to meet mothers who had kids and would socialize. None of that was happening again. You know, oh, this was where I used to come to get this. None of that was happening again. So when organizations make decisions, they need to be aware of what that impact is. Or when we as advocates or activists go out there and say, no, we need to do this, we need to work from home, or make certain decisions, we need to look at things in a 360 perspective. Or what does this mean for environments? You know, when we think about future of work and, you know, the broad perspective, according to the Science of Total Environment, a journal which was published late 2020, you know, with the lockdown coming in, there were actually environmental impacts to having the lockdown. So people working from home, yes, that can have some environmental perspective impact, positive, negative, the jury is still out. But what they identified and cited was that there was a 500% decrease in sewage and industrial affluents in the river. So yes, maybe some impact. Wildlife got the chance to reclaim their land, you know, noise levels reduced as well globally. So yes, there was impact. But when we think about, you know, all of the other perspective of all of the other stakeholder values, what does this mean for shareholder value? Who gains or who loses? Where is the balance? I love this quote that I'm going to share with you from BBC. I found it, and it says, you know, in the midst of the pandemic and the lockdown, you know, and people working from home, he says that there's clear water in the Venice canals, blue skies over Delhi, and wild animals are roaming boldly in lockdown cities. But the oil industry and the airlines are floundering in the new world, and carbon emissions are falling fast. So this reminds me that while it may seem that, okay, yes, let's work from home, it's good for the environment, or many other things that, help the environment, what does it mean for even shareholder value? Because stakeholder capitalism is not at the gain of one or the loss of the other, but it's really looking at, as we serve all the stakeholders, where is the shareholder value as well? So the future of work may be here, but to lead change in the face of all of this, we must be intentional and responsive as opposed to just being reactive with what we do. So this is my perspective, and over to you, Mike.
Thank you. I mean, I'm Canadian, so we're pathologically polite. ladies first, but just because what I have to say is so closely tied to what Yvonne has shared, and thank you so much for that, Yvonne. I'd like to jump in now. I'm also deeply involved in the change space, and specifically the purpose-driven change. I'd just like to unpack for just a second. We've moved beyond, let's say, I hope we've moved beyond, to a large extent, the Milton Friedman doctrine of shareholder value to stakeholder value, and that's a great thing. The title of this event, however, is Beyond Stakeholder Value. So what does that mean? I think the stakeholders, the minute you start to define who is a stakeholder and who is not a stakeholder, then you are in danger of falling into a trap of us and them. And so what we want to talk about is a more all-encompassing approach that regards the environment, the climate, that regards people at the other end of this planet as part of the overall scheme of things. So I think really to move beyond and to actually learn from the current multiple crises that are ongoing, and to move beyond, we really have to take in this all-encompassing approach. So that's one thing I wanted to say. Three more things. One is what we're learning from this pandemic with remote working, with the surge in digitalization. I've been working with a major chemicals company in training staff to work remotely and work on their communication skills, work on how they engage digitally remotely. It's fascinating. And exactly as you said, Yvonne, it's not, I don't think as we emerge from this crisis, I don't think we're going to say, okay, work is all remote now, or back to normal. It's going to be hybrid, and that's a really good thing. A lot of technologies, I would maintain almost all technologies, to actually move us, to move the needle, we need the convergence of technologies and approaches to things. It's not black and white. It's not like, from one day to the next, you adopt a completely new technology and everything is different. It's all about convergence. So that's one thing I wanted to say. The other thing is that's impacting the future of work, and also the present state of work. We cannot divorce work from learning. So we have this lifelong learning that is becoming more and more important as the demands on workforces continue to rise, as technologies and different methodologies evolve, that people, you can't expect to start a study program and after 4 years that everything you've been learning is still even relevant at the end. I mean, unless you're studying, say, philosophy. So this is the marriage between work and education. There has long been this discussion of brain drain, and where you have people, say, typically coming from India to Silicon Valley, they study and they end up working there. And you say, well, okay, what is the benefit to India? Well, this is changing. There's a new paradigm that is termed brain circulation. And in fact, people who come from different geographies and learn and work in other places, their knowledge, their wealth tends to increasingly cycle back to other countries. And this is another thing that relates to this interconnectedness I touched on. So these are two things, remote working, hybrid working, brain circulation. The third thing I want to talk about is related to a book, a very influential book by Frédéric Laloux called Reinventing Organizations. Now, this book I highly recommend it to everyone. It talks about the way organizations have evolved since ancient Egypt, and it talks about a new working paradigm that involves an exponential increase in worker autonomy. Now, I think if you look at what I was talking about, the increasing demands on professionals, on skills and learning, plus the war for talent among corporations, you need this higher level of autonomy to keep the best and the brightest. And this is something that I think increasingly companies cannot afford to ignore. This is also related to what we know about what motivates people. Autonomy is one of the three main mastery. Autonomy and learning are three of the main things, and purpose are the three of the main things that keep people engaged in their work. So if you look at this idea that there can be an organization with no boss, it's like a team of Navy SEALs. Anyone can take the leadership role anytime, flexibly. And people are not demanded to adopt a certain opinion or to develop a certain opinion. They're simply asked, what is your take on this? Can you contribute to this? Do you want to contribute to this? This gets people on board, gets people and keeps people engaged. And I think this is something that is going to very strongly shape the future of work. So sorry for going on so long.
Very passionate session. So I know we requested 5 minutes, but we're averaging at 10. So
it's hard. Yeah, sorry.
A lot to say, definitely, and a lot to share. Beth, over to you next.
Hi. Yeah, I'll keep my comments brief to pick up on what Yvonne and Mike have already said. So my name is Beth Porter, and I am the CEO and co-founder of a company called Riff Analytics, and we study team interactions, peer dynamics in collaboration environments, and particularly through video and text chat to let people understand how they show up. How they affect others, and the kinds of affinities that they're building through their online relationships. I'm also the co-founder and managing director of a company called ESME Learning. And at ESME, we are working on courses in digital transformation. We used to call them digital disruption, but we're moving on. We're saying, yep, disruption has already happened. It's left the building. So now we're really talking about how to be productive and not just sort of have that woe is me attitude about, oh my gosh, digital is going to crush my soul, but really to be helping organizations work toward transforming not only the organization, but themselves and how they collaborate and work collectively with others to move the entire organization, their own careers, and their teams forward. So one of the things that's a really strong theme for me in both of those pursuits, and what I'd love to continue the dialogue around, is really this idea of learning as a social activity. And we really believe that all learning is social, and that part of what helps us grow and evolve is not just taking on and understanding new skills, new mindset, new sensibilities, but to increase how we can affect the organization and others by sharing those ideas with other people, lifting other people up, having a share in leadership, and being able to work collectively toward the greater good, even while also pursuing your own professional path, your own professional development and your own professional skill advancement. So this idea that there is there's a lot of value in building trusted relationships, and that some people are really worried about how to do that in the domain of online. Right, I'm not seeing you. Anthony, I'm really appreciating that you're going to make a good point for me right now. Anthony is doing something that we track and that we do in our software, which is showing nonverbal signaling. So one of the things that's kind of missing when you're online is that you're not always getting those nonverbal signals from people, and it's hard. Right, I don't even see all the people who are on this screen right now. I don't know what the heck screen 2 is doing. I have no idea what they're even on or not. But so a lot of that stuff is lost in the noise of being online. And one of the things that's really important is that you actually surface that and you help people see what's really happening, what's happening in all the hidden pockets of even within your very small, group, your working group or your teams or your teams of teams, and being able to expose all of that and bring it forward so that people can become more effective, more trusted, learn how to lean into relationships where they have strengths, learn how to work on those where they have weakness. This is a lot of what we work on, and a lot of what I'm interested in talking about in this call is how we do that. How do we help people learn how to operate more effectively online and do that in a sort of like a generous and humanistic way rather than a surveillance way, which is what makes everybody nervous and what is, I think part of the dark side of doing that if you're not doing it with trust. So I'll leave it at that so I can let Samira hop in here.
Yeah, just before we go to Samira, actually, Beth, I was curious, maybe you might want to share a little bit about your teaching responsibilities at MIT Media Lab and just tremendous research and insights that are coming out of that part. I know we're trying to keep this short, and I see a couple of people who raised their hands already. But
I'll make it very short. Yes. So what we study and what the RIF in particular, but all of the things that I've been doing in the last several years is around the effect of both data collection and feedback loops on how people interact and are able to be successful together. So this is all in the space of collaboration, peer interaction, feedback loops around measurement of people's interactions patterns with one another, and then the effect. How people perform, their attitudes toward one another, their ability to trust one another, their ability to complete tasks collectively. So this is really the foundational research that we've done at the Media Lab at MIT, but have continued even going forward into the 2 commercial exercises that I was, the companies that I was talking about. So that's very brief, but if you want to ask me more questions about it, I'm happy to answer.
Well, I'm sure we'll come back to this, Beth. It's always fascinating. The Media Lab is, of course, the poster child of MIT. So, it's always endless, fascinating innovation coming out of that. But I do want to invite you, Samira, on stage now, and please share with us your opening remarks.
Yeah, greatly appreciated the comments so far. Thank you so much, Navroop, for having me. I'm currently at Microsoft. I'm on the Citizenship Market Development team, which is under a broader team called AI and Sustainability Market Development. And one of my key priorities this year is a program called Accelerate. So I think it's very interesting because it builds off of some of the comments that have already been made and takes it up to a macro level. So how will the role of different stakeholders change as the future of work evolves? What Accelerate is it's a very much an ecosystem approach to the future of work. So we have these government entities in different cities in the US, 14 different cities that we're partnering with. And we're really trying to build on their workforce transformation pipeline, build on the great work they're already doing in the communities, because the focus of Accelerate is how do we get underserved communities better prepared for jobs of the future. So you have this government piece to it. You also have this community piece to it. There are nonprofits who really know the target population, who develop these connections. How can we leverage what they're already doing to really build these pathways in partnership with them? We've also developed these partnerships with learning partners at the national level, the Europes of the world, General Assembly. So everything from those who are addressing programmatic pieces of it to the boot camps. And then there's this corporate piece of it as well, where Microsoft's making an investment and going to our customers to actually make a financial commitment toward Accelerate. So put skin in the game over the next couple of years to build the local sort of tech hub ecosystem and develop various coalitions around hiring, around skills, etc. So one of the cities that I'm going into first is Los Angeles. And Los Angeles, you know, low to medium digital skills, certainly an underserved population that needs to be brought along as these corporations change, etc. And the reason I'm so excited about the model is the main risk is if you don't bring everyone along, this inequality gap that exists between those who are endowed with resources and those who can't keep up is only going to increase, especially as technology evolves, especially with automation. And I think there is a component of it around hybrid work and how do we think about remote working and what is the lens toward that as we develop the ecosystem, etc. So we're kind of trying to go into each city in a cross-partner way, figure out who's doing what on the ground, and bring these macro-level resources to really design these pathways and make it more affordable for people as well as more palatable for them to join the workforce differently. So that's the idea of the program. I think where stakeholder capitalism comes in is one of the pieces that we're trying to sort of uncrack is the data piece. So where are these sort of jobs of the future? What does it look like in LA? How does that differ from what it looks like in another US city? How does that look differ from what it looks like in, you know, Malaysia or another country as a part of a global skills initiative? So we need some more data to really achieve outcomes. So I'd be interested in how data shows up in, you know, the work of others here as well. And then the stakeholder capitalism piece is, well, then what does that mean? Like, how does this affect our planet? How does this affect our people in terms of no poverty, etc.? So one of the questions I'm trying to think a lot about these days is, sure, there's workforce transformation and economic development, but there are broader macro issues the world is facing around climate change, around sustainability. You know, earlier the notion of purpose was mentioned, and purpose-led lives and purpose-led careers. So how can we work in a culture of sustainability and purpose into these sort of skilling and job ecosystems? So it's not just looked at as how do we get this person a paycheck, or how do we get this person a paycheck over a sustainable, you know, period of time, but how do we value if they're doing work in sustainability differently? How do we value if they're sort of trying to make this world a better place differently? And how do we attribute some sort of monetary value to that, so that when you're, you know, earning your paycheck, it's not just about how much you've helped a corporation kind of, you know, make more money, but how much have you improved the state of the world? So how can we change the calculus or the scorecard around, you know, people, planet, and profitability to really reflect stakeholder capitalism in these workforce development ecosystems is a question I'd love to throw out there. So thank you so much, Navroop.
Thank you, Samira. We have a couple of hands raised here. I would request you to keep your comments short, particularly if you have contributed to previous roundtables. And with that, I would like to invite Alexandros and Devin to the stage in that order.
Thank you so much. Thank you so much. They are all. Once again, I appreciate your efforts in making the best for me to contribute your think tank event. Thanks for all. Well, future of work might be a big question mark for the employees. Let me tell you. Yesterday, of course, COVID leveraged all the effects. The more the days passes, things start getting more effective and efficient for the people, for the workspace, for the companies, etc. Yes, everything should have speed up much earlier, and the COVID is the clutch player. Okay, so yesterday we were speaking for the 2332, like Mrs. Rula Carla Fire. I read her article the last month in Financial Times. She was one of the first persons spoke for the hybrid model, the 2332. Say it like you like. Okay, so this model suddenly became like 322, 3 days to work, 2 days off, 2 days and 2 days from the home to work. tomorrow it might be another definition of the redefinition and some other factors for this equation. But nobody speaks for the employees. What about the money of the employees? Because in my opinion, if things might proceed like this, then the cash handouts or helicopter money, like you say, it's the same, okay? This will be a traditional thing which will take place more and more in our life, the cash handouts. The inflation will go up always. So the employees might be hurt too much. About the cash handouts, etc., perhaps this is the UBI, the universal basic income, and this is just my question because some insight genius people have already priced in a long time before for the UBI, the universal basic income. So now everything is priced in, and finally we speak for the UBI. What's your opinion for the UBI? Is finally what we live now the UBI pre-model of existence from tomorrow since forever? This is just the one question of me. The second, I care and I am concerned for the activism because in my opinion, the Zoom concept cannot be a lively situation for the activism, for the hedge fund investors and activists, because when you are in the table, everybody, then there can be a strong activism. Or else, if you are in the home, I am concerned for the activism, which means that this might be a very big drawback for the carbon emissions, the net zero promise, etc., etc.
Right.
Thank you so much for the time.
Thank you, Alessandros. We'll continue to explore and unfold this. And I just put in the chat how economists have a lot to say on universal basic income that you just brought up. But I know we have Devin, Sylvia, and Shri in this order here. Devin, I'm going to request you to keep it short, if that's okay, so we can keep the ball rolling. Thank you.
Yeah. In the interest of keeping it short, for those of you who already have heard me speak, I have a platform for universal basic entrepreneurship as opposed to UBI. I focus on creating startups with underrepresented founders, anti-fragile small businesses, and the transformation of gig workers to micro businesses. So I had talked yesterday about this SWOT analysis about what's going on right now with the Great Resignation, the introduction of automation to take on these low-paid workers that are not coming back, and the data gravity of these exponential organizations leading to monopolies like Amazon, Google, so forth, and that the opportunity is that these employees are disconnected from employers. So they've been disconnected from this opiate of salary to be now building somebody else's dream, and they can start, they're refocused on thinking about how they can build their own dream. And the tools to do this have become more accessible across the board. Diversity and small business support is on the trend radar in a way that it has not been. I've been doing this for 15 years, and talking to people about underrepresented founders was like talking to people about gluten intolerance. People just didn't care. And now they do in a way they never did. Businesses started in an economic recession are historically more successful than those started in a boom. And exponential organizations are more successful in general. And I think there's somebody here who's in Singularity U, he can back me up on that. So, but the weaknesses here is that there's a risk appetite. There's a lower risk appetite in underrepresented communities. They have significantly less risk tolerance, and they have significantly less access to capital, and lack of revenue creation based in incubator content. So there's a lot of incubators that are focused on underrepresented, focused in general, but they're more Shark Tank generated. Like they're more like, hey, pitch to an investor and you can be a millionaire. And none of them are going to invest in them. You have to have 2 to 3 years of runway. You have to have MRR of about $1 million a year to $3 million a year, and they're not at that point yet. And then they just stop doing it. And the major threats that I really want to talk about here is this K-shaped economy coupled with the flywheel effect. So everyone loves creating a flywheel effect the more it goes, the faster it goes, the increase in productivity in whatever direction. But the problem is the flywheel goes both ways, up and down. So you're seeing this K-shaped economy splitting further. And I became quite disillusioned with tech training because I found that the big monopolies were using it to rob the new oil, which is tech producers, and create a commoditization of that tech training. I find that there's a great book called The Fourth Turning by Neil Howe and William Strauss. It talks about these 4 stages. The high, think about right after World War II. The awakening, think about the 60s. The unraveling, think about the 80s. And then the crisis, think about now. I'm creating the warriors for the next turning. Mm-hmm. Take all of these people who would be a drone worker within a huge corporation and teach them how to create a company that is changing the world and making it 5% better. It has stakeholder capitalism as its DNA at the beginning, and teach them how to do that and be revenue neutral. They're creating enough money to support themselves, and then they can expand out or not, but they've got their own business and you've solved more than one of the UN SDGs in one go. So that's my
fantastic, Devin. Absolutely. I really love the way you connect all the dots and have a lot to say on every roundtable. And of course, it's all interconnected, and it's actually not a coincidence that, the way the agenda of this summit was also designed, it really looks at the intersectionality of various aspects, whether it's work, urbanization, energy, sustainability, technology, tokenization, etc. So, okay, so we have Sylvia, Shri, and Reshma, and we have around 50.
Sorry, Navroop, I just want to make a brief comment on what Devin has been saying. Thank you so much for that. This is really fascinating, and it ties directly into this concept of Frédéric Laloux of reinventing organizations, that in essence, the future of organizations, if we want truly agile organizations, learning organizations, we're going to have to create that entrepreneurial spirit within organizations. Not everyone is going to be able to launch his or her own startup. This is reality, right? So if you can create that sense of autonomy and energy within an organization, you've got a model that is going to be much more resilient and agile.
Thank you. Sylvia, I don't believe you've heard from you so far, so please do introduce yourself before you start your comments, and welcome today.
Thank you. Hi, everyone. I'm Sylvia. I'm the founder of a digital agency in San Francisco. We started over 10 years ago. Mostly, I'm a creative problem solver, and I like bringing ideas to life and trying to understand really complex ecosystems and then trying to simplify them to either ingest them easier or to make them easier to experience for other people. But I just wanted to comment on 2 things. I think, it is really interesting how we're always, as we're trying to talk about stakeholder versus shareholder capitalism, I think there's like people have a really hard time, and this is something I've been trying to bridge a lot with my clients, talking about what they're going to give up. Because I think for everyone, when you're trying to meet the needs of different stakeholders, that means that you have to be willing to give up power of some sort that either you had knowingly or unknowingly. And so bringing up those conversations when either within an employee context, like in the case of employees returning to work, like having more flexibility or being able to, really voice their needs about like, hey, I need to work like a shorter day because daycare is not open or it's open in a remote model. And so I think that's a conversation that's really hard to bridge, and people love really like romanticizing this idea of like, yeah, we're going to meet everyone's needs and we need to hear about that context. But what I loved about Yvonne's opening remarks were the whole fact that she was mentioning, yeah, we got to look at the entire impact. But the flip side of impact, obviously, is like, where are you willing to give? as like someone who has some level of power, where are you going to give up your power to concede and actually make space for those that need space to like balance out a better equation? And so the second comment I wanted to make is about redefining success. And I know yesterday there was some discussion in one of the roundtables. I cannot remember right now. I'm sorry. I'm a mother of two, and my youngest baby didn't decide to sleep a lot last night. So my brain's not 100% here. But what someone was discussing, this whole idea of success has to be redefined, right? Success used to be defined as productivity. And I think we've all realized that productivity is obviously not the best definition of success, because it's like productivity for whom, and like what is the impact of endless productivity, and how many other people are affected by like that, you know, boundless productivity, and who's actually reaping the benefits of it. And so I think there have to be really honest conversations, both at work and beyond, of like, what does success look like for the organization long term, for the employee long term, and for stakeholders all around. So those are the two things I just wanted to mention really quickly. Thank you for allowing me the time to do that.
Navroop, can I just jump in quickly and
go for it?
Sylvia, I just love what you said, and very true. When it comes to stakeholder capitalism, people tend to look at one or the other. We have to meet the needs of all. One of the things that is very key to me, or what we teach about when we talk about change leadership, is collaboration. So when groups begin to stop seeing themselves as separate groups, all trying to get into the pie, and starting to think about how can we come together to find the solutions. So when collaboration becomes key, when co-creation becomes key, then we start to change the conversation. You know, I especially love, not especially love, but, you know, I've seen different things even around this pandemic, when people start to think about, oh, let's do what we think is best for this group. What about how do we bring this group together, and let's kind of collaborate, and let's kind of co-create and find the solutions? Because if A says to B, this is the solution I think works for you, even if B, human behavior, even if B thought that was the right solution for them, just because you're dictating it to them, they push back. You know, they push back on it. But once they feel they're part of the conversations, then it's a different thing. And this is where change leadership is very important when it comes to the future of work, is how do we manage that resistance to change? How do we get buy-in? How do we work collaboratively? How are we more visionary about it? How do we come together? And that's really going to be key. So Sylvia, thank you for raising so many great points.
I'd like to add to that, if I might, Sylvia and Yvonne, on both the things that you said, and just take it down to like the very lowest part of the organization, which is really around the culture of dialogue and welcoming people to be part of the culture. One of the things that I think many of you probably have either read about or felt directly is that a lot of D&I initiatives really focus on bringing people in, and very few of them focus on keeping people in. And one of the ways that you change the culture of the organization, and really just the pattern of work in general that leaves the space open for all the things that you've both been talking about, is actually allowing everybody to have a seat at the table, quite literally. And then when they get there to the table, that the same two people don't say everything, right? I mean, I'm actually one of those people who really has to bite their tongue because I have so many ideas and I just want to share them all. And part of, you know, like developing the strength as a leader that will help this all drive forward is that you have to be able to back away, and you have to really share your leadership with others, and then allow them. Somebody who said something about autonomy, either in one of the chats or in the speaking, and, you know, that being able to give or lend autonomy to others in the organization, and then say, I'm not going to take it back when they immediately fail. I'm going to leave them to allow them to drive new change in the organization. I think this is something that we really just don't embrace very well, because we're so worried about things failing, and we're so worried about giving up our power that we can't even at the very lowest levels of the organization drive that new set of behaviors. And a lot of it is around knowing that that happens, and then being able to measure and see what the effect is, and then actually being able to change it afterwards. So anyway, I just want to add to that.
Thank you, Beth. Fascinating. Wow, this is only getting started. we got 10 minutes left in the roundtable, and I have Shri, Reshma, and Heidi Please keep your comments very brief. We are towards the end of the roundtable, and I do want to hear from the co-hosts here before we conclude this roundtable as well. So over to you, Sri.
Thanks. Yeah. So we spoke about the hybrid model. I think one aspect that we need to look at is one of the downsides of the hybrid model from the employer perspective is it's probably going to lead to increased cost of compliance with tax and legislation, right? So with people working from home and people working from multiple jurisdictions, it's going to involve a lot more work to ensure that the organizations are compliant with tax regulations and other legislations. So that's going to increase their cost. On the flip side, what we are also seeing is already happening is there's a war for new talent. So many of the organizations, what they are doing is they are looking for talent from tier 2, tier 3 towns and cities. And that's because these are the low cost towns and cities, and it keeps their cost of hiring down. And which means that if this trend continues, and I think obviously post-pandemic world is going to be different. It's a new normal, and there's every chance this may continue. We may find that people again, in fact, start continuing to move away from the urban centers, right, and move to tier 2, tier 3 towns and cities. And we spoke about the future of urbanization and how it's going to increase, by 15-20% over the next couple of decades. But that growth rate could be balanced by this trend. If people are going to start moving away from urban centers to tier 2, 3, the pace of urbanization is going to have some downside to it.
Thank you, Sri. Great points. I think the employer side of things has not really been explored as much in the conversation so far. So thank you for bringing that. It's not easy, to find the right talent at all, and having, regardless of the number of incentives, retaining them. And we're seeing that complexity as well playing out. So, Sri, Reshma, and Heidi are from the previous roundtable on urbanization. I see it as a good sign that all of them have raised their hands. So, okay, so we'll go in that order, Reshma, Heidi, and then I would like to have Samira and Mike to say the final remarks before we close off.
Yeah, I think this is fantastic, strands developing between the previous roundtable and this one. I just want to respond to 2 points. One is about de-risking, and Devin, I love your, K-shapes and your flywheels. And I think one of the roles that we play in the government is to de-risk. And when you're talking about going from no-collar jobs to white-collar jobs, I think the program that we invest in, which is Impel, we're literally looking for those gems across the country, those diverse voices and those ideas in the built environment. It could be a homemaker from Idaho, it could be a hemp grower from Mississippi. It could be somebody who's thinking about their how to make their cold homes more energy efficient in Alaska, right? We want to hear them all, and we want to help de-risk their ideas and take their technologies to market. So I think going to the Impel website would be great, because send entrepreneurs and send thinkers our way, because we want to help fund them to get to the next level. And we're looking at literally those underrepresented regions and underrepresented people who are thinking about these things. The second thing is regarding what Gary said about psychological diversity and psychological safety. So the BOLD program that I alluded to earlier, which is building operational leadership through digitalization, that is another way how we are investing through the Department of Energy initiative into women who would feel psychologically safe. In many countries across the world, women don't feel psychologically safe going out of the buildings. So this is a place where you can work inside buildings, lead program teams, and use digital products to bring forth sustainability through doing things like smart metering, analysis of data, and giving them the training that is needed to become leaders in this sphere. So these are just examples of how we're approaching democratization and bring the future of work to people, what they can do from home and what they can do in the safety of their own homes and their buildings. Just wanted to share those 2 with you.
Thank you, Reshma. And I would say Reshma has shared some resources in the chat, and of course, the government has a lot of money. I don't know how else to say it. So go avail them, go take advantage of it. You have her here, and you've heard her, and don't hesitate to reach out to Reshma for any further information or support. So thank you, Reshma. Really appreciate you bringing tangibles to the table today, which is what we're all about. And with that, Heidi, I'd like to invite you to stage. Kindly keep your comments brief, and over to you.
Thank you. I wanted to bring up a topic that's been kind of alluded to and talked about a lot. And one is something that I see pending and looming coming up with schools opening is the impact on youth on all of these conversations, and moms who are trying to hold it together and trying to prepare themselves for what's coming, and the real estate. I know those are three main topics I want to talk about more, but the real estate costs going up, the time, the limitation on moms, for example, to go and get full-time jobs and then do that and manage the mental and emotional state of their children going back to school. This is a huge problem. In Boulder, Colorado, we actually had a couple of shootings happen during COVID and near a high school. And we found out that one of the young people was bullied, 19 years old, and was going actually to a high school and to shoot up a high school. So I think one of I want to just put a placeholder in that young people being disenfranchised with all of us trying to figure stuff out and not quite leaping forward for them is one of the biggest threats to national security, is young people's mental health. It comes out in many in ways, suicide. There's an epidemic of eating disorders and epidemic of younger suicides, and all these things are happening with the youth. And and I want to just put a bookmark in that, because I don't have enough time, but it is something I want to talk about. If anyone wants to talk to me about it on our Slack channels or anything like that, or make a comment about that now, anything that you're doing that could actually help moms prepare for this craziness, I would love to hear. Thank you.
Totally, Heidi. So timely and relevant. I usually say Heidi's 5-10 years, generally speaking, ahead of where the world is. So I would say, Heidi, please share your email or whichever way is easiest for the participants and colleagues to contact you here as well. I'm sure this is a shared concern. All right, I want to give it back to you, Mike. I know this is the roundtable itself is co-curated by you. So how would you like to move forward for our remaining minutes?
Yes, thank you, Navroop. I think I'd just like to, cycle back to something I mentioned again, and I don't want to over promote this book and this concept of reinventing organizations, but this is really, I think, something that really deserves our focus. That this autonomy in the workplace, it can mean different things to different people. To one kind of professional, autonomy can mean picking out the people you want to work with on a given project. For another type of professional, it can mean completely inventing a project. We've had this phenomenon of the 10% time at Google and I believe Microsoft, a number of other tech companies, where the motivation and engagement of employees just skyrockets when they are given a certain packet of time where they can determine their own projects, and the interesting thing is that they don't waste their time. They're actually more effective. Most of Google's innovations have actually emerged from that 10% time project or initiative. So this is really the point I want to make, that I think it's not a black and white issue. The concept of autonomy, it's a sliding scale, and it's very individual. You don't need to put pressure on people to take initiative. You need to open the door so they can determine for themselves what taking initiative and what autonomy means for them personally. And I think this is something that companies can no longer ignore. So that's my 2 cents in closing.
Thank you, Mike. So I think, Samira, I saw a lot of encouragement here in the chat also to say more. So please, please do share more with us on a bunch of these issues and that we've been parsing through the last 50 minutes.
Yeah, no, definitely. I haven't, read the book that Mike just mentioned, but I'm very keen now. And I think it is really about reinventing organizations, not just private businesses, and opening doors. I mean, I mentioned in the chat that in my view, at least, there's a huge component of incentive change. So how do you change the behaviors and the actions of actors across this ecosystem? Corporations, social enterprises, individuals, so that they're willing to invest more in things that they care about, which speaks to really the heart of stakeholder capitalism. And the only way we're going to get there is some sense of accountability. In the private markets, we do have that sense of accountability with profitability, with stock exchanges, et cetera. What is the equivalent when we're trying to hold ourselves accountable to populations like the youth, women, their sort of economic development or their economic security and health, but also how we think of them with respect to sustainability and the intersection between sustainability and equality. So there's so many facets of that. So what is the accountability mechanism? And secondarily, once that exists, how do we co-invest together? Reshma mentioned a bunch of programs that the government has done, the investments they've made. How do we leverage existing sort of activities and really co-invest together? And I think the sort of key lies at the heart of Navroop, your work with so many great leaders, which is digital platforms. So how can we create a digital platform that allows for that type of transparency, that the future of work is not only defined differently, but we have mechanisms to hold one another accountable and co-invest, especially as we think about underserved communities. And that could involve sort of policy changes, it could involve model changes, whatever it may be. So I leave you with that is how can we use digital platforms to really advance stakeholder capitalism and apply a new lens to the future of work and what we care about.
Thank you, Samira. This is excellent. Extraordinary abilities Samira has to tie it all together. I do see a whole bunch of comments here that Beth, we're calling upon you. So I'm just hoping you can make one final comment for a minute, and then we're ready for our next roundtable. So over to you, Beth. We'd love to hear from you.
Yeah, I think it's just really easy to ignore a lot of the groups that end up at the margins of our core discussions. I think Ray raised one really, really good point, which was about the idea that so much of our discussion centers on white collar workers, information workers, and not people who literally have to show up at their jobs because they can't work anyplace else, and for whom work from home initiatives are not relevant. And I just wanted to say one other thing about that, which is that that's often true with learning also, right? So that on-the-job learning, opportunities for growth, opportunities for promotion and development, all of those things tend to favor people who are in a certain class of the economy. And we really need to go back to sort of first principles around making sure that training and opportunity is open to everybody, and think really carefully about university education, where that ends up leading us in terms of developing the workforce of the future, and really looking at how corporations should be a part of helping enable people to become more skilled, differently skilled, laterally move, whatever that lateral movement looks like, and not to ignore everybody at all the different levels of organizations and work capacity. So that's my final thought on the future work.
Thank you. I think right on time. We have exactly 30 seconds and all the hosts in the room for our next roundtable. I would love to give sincere thanks to Mike. Please do keep yourself on mute. Thank you very much. Beth, Yvonne, Mike, and Samira, who just brought brilliant perspectives and not just from a theoretical perspective, which is what we care about, is what are the initiatives on the ground that are making the world a better place. And that's really what we stand for and what we want to foster. So with that, I would love to invite you all and welcome you all to the next roundtable, which is on energy transition, which is key to the future of work, to the future of urbanization, to the future of everything, right? Big, strong agenda at the World Economic Forum as well when it comes to energy transition. So we really think the convergence of various aspects, right? Not just technology, but also physical critical infrastructure is key here. And that has kind of sort of gone into the curation of not just this roundtable, but also the summit as a whole. You will see representation from energy companies, folks who are working on renewables, and you know, I'll let the hosts speak and introduce themselves in a second here. But I would like to invite everyone to not forget to fill out the feedback form, which is just 2 minutes long. And if you'd like to follow up or just give us feedback, that's great. We truly appreciate it. And with that, I will hand over to the next set of hosts. And who is going first? And Pramod, Ashok, Amit. If there are no takers, I'll just invite Anne.
Yeah. I think I am going first. Yeah.
You know, ladies first, right?
Ladies first. Ladies first always.
So there's one lady, has to be that.
So thank you so much for the opportunity to speak on such an important topic in such an important historical week that we all are part of right now, based on the IPCC report have come out. And it was interesting yesterday where we did the preparation for the panel today. I mean, we could have kept on speaking for hours. So I think that this is something that is dear to all our hearts, whatever you are in this sector, or if you are watching the whole evolution, what is going on. I think that even if you just turn on the TV, look at social media, look in the news, everything is around climate. It's not about health, it's about climate. So I just want to go one step back first when we look at this whole topic here, and just one word about my background, and then I want us to reflect on, because it's not like the first time in history that we're speaking about the climate risk and why do we think we can solve it, or maybe not solve it. Why do we think that we have a way to move on with the whole situation? So I'm Danish. I do live in LA. Denmark happened to be the #1 on clean tech and green, the whole green movement in the world. As the other panelists would say to me when I said that yesterday, that's easy, and because of the weather conditions in Denmark, I get it. But Denmark is a very sustainable country. I have been working for SAP for more than 21 years, left SAP to go and work in at PLC with an engineering consultant company who are totally focused on working on net zero resiliency and a huge transition. And my passion to go in and do that is that I saw with all my work with UN the last couple of years, where I built the SDG ambition together with UN Global Compact, that allows together the Secretary General actually at World Economic Forum just before the COVID really hit the world, in-person event, which this January then would be 2 years ago. We launched SDG Ambition, which is a framework for the private sector to drive the transition, not just around climate, but it's also about circular economy and, you know, across the 17 global goals. So I joined Wood because I saw that there is a 7% technology gap. So even though we have all the capabilities within technology and much more will come going forward, we do need to have the design and the principles and building solutions that can go in and redefine the way we work, in this case, in the whole energy sector. And this is where we need the mind of engineers. And I'm so blessed to be with a number of engineers in the panel, so they will speak very detailed about what they're working on. But I just want to say to all of you who's joining this roundtable is that the fact is that there is a huge technology gap. Yes, the capabilities is there, but the solution and design need to be built. And I recently came out with a science fiction book because I think the scenario planning design fiction mindset is required. And you will hear with some of the people that will be speaking here today with me is that they were literally futurists in what they built. And now what they've been building and working on for years is really being a big contribution to what we need to see going forward. But just a reflection I want to give to all the people in the roundtable. And it really goes around, why do we think we can do the change now? So first of all, COVID have learned us a lot. And I think I don't need to go there. I think a lot of people are fully aware of what a crisis means because COVID became personally to all of us. But if you look at the whole climate situation, it has been really historically interesting to observe and be part of how US rejoined the Paris Accord beginning of the year, the Larry Things letter to the CEO of the world, Bill Gates, how to avoid climate disaster, and ongoing advocacy around the big climate change. We saw, you referred to it, the World Economic Forum that was virtual this year. I think the majority of the session was around climate. There's an explosion of event now. I mean, I think you cannot do an event without addressing, and you should not do an event without addressing sustainability, resiliency, and net zero. We saw the big infrastructure proposal that came with Joe Biden when he had world leaders gathered in Q2. And there's been a lot about those infrastructure proposals also this week. And then we saw, I think I've been working on COP26 more or less the whole year, and it's just accelerating as we get closer and closer to November. And then not to forget that at the 47 G7 summit in June in London, the main focus, of course, was on climate, of course, also on COVID. And then not just to forget, this week, I just came out, I run on COP meetings every week on Clubhouse. And today it was about the IPCC report. And I think this week has been very much about a how moment, not that we somehow did not know that this was not going to be complicated, but I think that you get it from on paper, documented facts, data sets, and the fact that we kind of knew it, but it is a human caused issues that we're sitting with right now. And we are in a situation that, can we fix it? I would probably rather say we should look at the situation as it is and begin to build a future where we really are radically improving it. And you hear that from the other panelists. So by this, I just wanted to refer to that today I work for Wood, and Wood is a 160-year-old company. It is in Scottish heritage, it's a global company. And what we focus on is really sustainable infrastructure, energy transition, and working with the technology. And my mission is really because the future of the energy world is based on technology, and you will hear some great solutions here shortly. So we need to understand this. And within that company, we are working really with the whole transitions within the fossil fuel market. We are working with the whole transition within recircular economy, with resiliency, with cities. We do a lot of work with UN, with EU, with governments around the world, all around infrastructure. So there's a huge opportunity we have in front of us, all of us. So it is a difficult time, but it's an exciting time. And last thing I just want to say to all of you, when we now are leading up to COP, and just before that, and that's why I'm a little bit more happy today than normally, because UN have just come out with the, so if you haven't looked that up, you need to look this up. It's even new intel to the team here that I spoke to yesterday for the preparation. The UN Energy Compact. And the UN Energy Compact is an initiative out of the Secretary General. And there will be a huge launch at the general sampling here in 1 month and 1 week. And the theme that they are focused on is all about goal number 7, clean energy. And it's about energy access, energy transition, enabling SDGs through inclusive, just energy transition, innovation, technology and data, and finance and investment. And I can just tell you, when you are looking at it is available now, the COP agenda. COP, for you who don't know that, I believe you all know that because you're into this topic, is the first 2 weeks of of November. So you have general sampling, and then 1 month afterwards, you have the COP, which will be in person. 106 head of states will come to Glasgow Monday, November the 1st, and they expect thousands of people from the private sector and NGOs to come into Glasgow. We would be hosting a house and another whole other conversation. We'll have a big presence there. But if you look at that agenda, I tell you, it's about realigning capital for the new economy, call to end financing new fossil fuel. It's about debt of coal, it's about phase out fossil fuels, and it's about making sure that we build up an energy sector and a way to access this that is as accessible for every single person in the world, equally and affordable. And this is also what my panelists that I'm together with in a roundtable will be talking about. So I just want to set you the stage that you have historically gone through a week here that will go into history. And it's not just kickstarting, it is accelerating this whole lead up to general sampling and COP and World Economic Forum. And the last thing I want to say that was said by a very incredible friend of me in the Clubhouse session today, you cannot go to COP and then say that was a great event and then go home and then wait for COP next year to continue the conversation. He actually said, you cannot leave COP before we have gone into a situation where we are improving things and not making things worse. So that is the mission we are on. So by this, I'm really thankful to be part of the roundtable, and I will hand it over to my incredible other panelists who is in this session. So thank you so much for giving the chance to start the conversation here.
Thank you, Anne. Thanks for inspiring us. I mean, what better? Your passion is, I feel it across the screen. I don't know where you are in the world, but I'm totally charged up because of your comments and clearly your leadership role in the world. And I do want to say, and I see Heidi cheering here as well, I do want to say there's a reason why we're holding this summit during this week. And I think at least half the roundtables out of the 10 mentioned the report as a starting point. So thanks again for lining that up here, setting the stage. And I know, Amit, you unmuted yourself, so maybe we can have you go next, and then and have Pramod and Ashok join in as well.
Okay, yeah, happy to talk about energy transition. And I think as we are gathered here virtually, and we are able to hold these meetings, which allow all of us to share ideas and collaborate without having to go and congregate physically in one place. I want to start with an idea of what would it take to virtualize our energy systems. And really, I think if you look at energy systems, and I think most people know this, that the fundamental architecture of power systems has not really changed much since the three-phase power won the war of currents. And the system generally works, although a lot of people in California and Texas would want to sort of dispute that claim. But the environmental cost and also the economic cost has been quite enormous, actually. So if you look at a few stats, there are about 1,000 plants, power plants, peaker plants, we call them. They are built and they're sitting idle for 95% of the time. And they are generally fired up for a few hours when there's a sudden spike in demand. So if you just look at Texas, there are around 65 peaker units. Almost a third of them are 20 years old. 30 of them run for a capacity factor of less than 5%, which means that they are just sitting idle. So it's an enormous waste of capital in many ways. But they're also extremely dirty. Even though they operate for less than 5% of the hours, they are actually contributing more than 10% in some, and a lot of them are oil, not even diesel based. The more modern ones are natural gas based, but they're still pretty polluting. They're also very expensive. So if you look at just the state of New York, you have these peaker plants where the average cost of getting this peak power is 1,300% times more than the average cost of electricity during all hours. And it has cost the state more than $4.5 billion over the last 10 years just to serve these 5% of the hours. And finally, I think more importantly, these peaker plants are very unfair because they are disproportionately located in low income and poor communities, and they create and so people who are living in that neighborhood are bearing the brunt of this high pollution that we see. So now I think so this is something not new. This has been going on for many years. That's how our systems have worked. Now, as we see more impact of climate change due to fossil fuel, wildfires in California, cold in Texas, the volatility of energy systems is actually increasing. And the ironical thing is that as you replace fossil power plants with renewables, you actually end up increasing the volatility even more. So now to deal with this new renewables, not only do you need peaker plants to balance sudden spike in demand, you also have to have more peaker plants to deal with times when wind suddenly stops blowing or the sun is not shining or cloud cover comes over a region. And that means that you have to build even more of these peaker plants, which is a self-defeating outcome, because for every megawatt of wind, if you have to build a megawatt of natural gas to back it up, then what's the point of, and that's what a lot of skeptics of renewables argue on why this energy transition is not going to happen, or it's not in the interest of economy. So now I think fortunately digitalization, especially things like AI and cloud, do provide a better way. And what I call virtual power plants is a cleaner, cheaper, and more reliable option for balancing renewables and solving this problem. So virtual power plants at the core is just orchestration of all the different assets. They can be wind farms and solar farms that utilities own and operate, but more often they're also distributed. Solar on your rooftops, or a battery installed in your garage, or an EV sitting in your garage. And through digital technologies, we can harness the power from these batteries and solar panels and electric cars, and even thermostats on your walls or building management systems in a commercial building, redirect the power back into the grid, and then redistribute to homes and businesses where it needs. So basically, instead of having power flow one way, we are now talking about a system that can flow power two ways. And this is actually something which is working today. I think it's, in my opinion, this is going to be one of the fundamental ways in which our power systems are going to get transformed. A few examples that we have been involved in, when the winter storm hit Texas earlier this March, we worked with the city of San Antonio, who run their own utility called CPS Power. They have about 250 megawatts of distributed energy resources that they have historically used for the summer peak days when the prices in Texas have been peaking, but they were able to activate it very quickly, and they were able to save tens of millions of dollars during just a 1 week period for their customers. They work on behalf of their customers. We work with, as millions of people in California are installing batteries now because due to power safety shutoffs that PG&E is doing and wildfires around it, you have these batteries which are needed for backup purposes, but you really need backup only once in a while. I mean, it's a fairly rare event that PG&E would cut your power. And even if they cut power in one area, people have batteries in other areas, right? So one of our customers, Sunrun, which is one of the largest installers of solar and storage, they are creating virtual power plants with utilities. And essentially, when they do that, the batteries that are in your garage can be rented back to the grid, subject to many different types of constraints. But the net is that anybody who's participating in a program like this can earn over $2,000 per battery, right? Which brings the cost of these batteries down, and the beauty is that not only does it bring the cost of these batteries down and it creates a flywheel effect of installing more batteries, people who are not able to participate, even for them, the cost of power is coming down and reliability is going up, because this is now a much cheaper and cleaner resource to bring back to the grid where the utilities can balance it. Similarly, like EV school buses, there's a big transition that is going to happen in the Biden plan, where school buses turns out to be one of the largest polluters in the transportation sector. So one of the largest mass transit system in North America, but these buses are very underutilized. And in summers, they're not running where a lot of peaking power is happening. So can we harness the battery, which is the biggest component of these vehicles, and actually use it to create a virtual power plant? So I mean, many examples like this. I think this is going to transform. I think EVs is definitely one of the big opportunities that face in front of us. And I just say that digital technologies are really the key in enabling this future. So I think for a system like this to work, it needs to be highly intelligent. You have to be able to predict demand and supply, not just predict what the mean is going to be, but variances, correlations from millions and millions of assets. So I think role of AI is very fundamental. The second issue is the role of just cloud and computational power, because if you think about a system which is driven by these distributed assets, in North America today, you have about 10,000 generation units. A typical ISO will have 1,000 or so units, and you need supercomputer class machines to run this. Now, if you take one nuclear plant, which is a 1 gigawatt plant, and you replace it with Tesla power walls, which is a 5 kilowatt power wall, for one unit, you are replacing it by 200,000 smaller power plants, which are more complex to operate because in many ways, because they have to take into account the customer constraints and the grid constraints. So you are increasing the complexity by 100,000 to 1,000,000 times, and you really need the full power of cloud and distributed computing and optimization to be orchestrate all of that. And then finally, I think this is a very complex system. A lot of different things are coming together, mixing and matching. So how do you speak with all the different protocols? How do you virtualize that interface? That's really the essence of a virtual power plant. So I think, in my view, the digital transformation will happen simultaneously with the energy transition. And I think even though power has really enabled us to make all these advances around computation in the last like 30, 40 years, keeping up with the Moore's law, I feel that now it's coming a full circle back, and digital technologies are actually going to now help us reinvent the power systems and show us how to operate it in a much better, more efficient, more reliable manner. So I'll stop there, and happy to answer any questions.
Absolutely. This is an highly expert session, I want to say. So we're averaging around 10 minutes per host. I would encourage that we leave some time for discussion as well. But thank you very much, Anne and Amit. Wow, what a fantastic opening set of comments. I would love to invite Pramod next. I think it would tie in well with what you just said. And then Ashok, who is working on Venables to follow suit. And then we'll open up the roundtable. Please feel free to raise your hand. You'll see the reactions function under at your bottom right. That's where you locate it. And we'll call upon you as soon as we have the opening comments from our hosts. Over to you, Pramod.
Thank you, Navroop. I don't want to take too much time because most of it has been covered by Anna and Amit. So I would put it in a more perspective point wherein we have the major issues, which is the government policy, then we have the adaptation to change by mid-management, and then the platform integration. You look at it, the push is now on the government policy because of the IPCC, which is what Anna has stressed out and explained to you completely about. Platform integration, everything has been spoken to you about Amit, and he has made it very clear that the solution is there. It's more of the adaptation at various points. Now, how do you change the mindset is what we are all working on, and who fixes the KPIs for all of these points is what actually is pushing things out. That's where we as a company come in, and that's what we are trying to do. We are now trying to integrate something called as a state and a national grid, wherein currently what you have a situation is you have a state grid, but there is no integration into the national grid. And with help of platform players like Amit, the idea is to have it along something as a national grid, wherein power from one source can be pushed into power to another source, wherein load balance can happen pretty much more effectively than what's happening currently. Thereby, incentives for storage systems like what Amit had put in was the battery guys and other people can easily be pushed into the system. And if you look at it, when Anna said Denmark has come up with nearly 50% of renewable energy, this is basically because they are on something called as a European grid. So when you're in a grid, you have stabilization peak plants, which is essentially not required because you have someone else generating the stabilization for you. And that can happen at what you call as the point of picking up the coal, wherein when you're picking up the coal, you can have the generation station right there rather than having it somewhere close to the load dispatch center. And that is where platform technologies like Amit and Ashok, wherein micro grids come into play so that you have a decentralized unit and pollution can be capped at each point rather than spreading it across various sectors. To just bring it to a little more point of perspective, we are actually in adaptation of these technologies, wherein we have now integrated renewable energy generation all the way up till the transmission to the first point of distribution, that is to the distribution of the utility level. Now, because we are using platforms like what Amit's have, we have been able to reduce nearly 20% in travel costs, in attending faults, in attending troubleshooting and things like that. So basically what we have is a digital platform which helps us to actually virtually monitor everything and virtually restart machines from a pretty far desktop. And doing that, we just need a semi-skilled person at site. That means we actually build a socio-economic solution wherein people with low skills capabilities in that region can also start the machine without any issues, with the support from a central station, thereby meeting up all the norms. So without taking much time, all I would say is this is what is the future. Hopefully, listening to Ashok would also add value to it.
Thank you, Ashok. The floor is all yours. Thank you, Pramod.
Thank you so much. So while there is a lot of focus and clearly mentioned climate change, and we are already at 1 degree. We only have half a degree left before we all die. So let's see how we can solve that half a degree problem. The transition, you all know that even in the US, there is a big move and big effort to do microgrids. I traversed my journey from India to US, back to India. And what I have been focusing on is the people who get impacted from the climate change that Anne has emphasized so much. While the impact of those climate change is much more severe on the bottom of the pyramid, on people in the rural areas, on the people who have to bear the brunt and do not have the economic means to take care, to adjust against that. So we have, we started to look at microgrid as an enabler for the energy access, right? And energy poverty is essentially equal to economic poverty. There is a direct correlation. So our focus was, how do we bring the economic development or socio-economic development in those communities which have been completely deprived of energy? You talk about megawatt, gigawatt, etc. I just talk about kilowatts. Sometimes I watch these games and I say, in that light, in that much electricity, I could have electrified 10 villages. I could have provided electricity to 10 of these villages. So demand management, and there is a poverty, there is a limit on how much energy we can really supply. You all know, I work in India. I started, my journey in India with Sarmoksha, and our focus is completely on energy empowerment and economic, through energy, economic empowerment. So energy is both used for, livelihood, irrigations, a lot of work that the rural India needs. And actually now I'm looking back into the Africa and USA, where our Native American reservations are welcoming the solutions that we have developed in India. So the energy poverty is everywhere. And what we have focused is primarily on the demand management. So smart grids, smart microgrids, where with the management of the demand, you can really manage your supply much better. You can reduce your energy requirement. Amit talked about it, that how AI can help really pinpoint how much energy do I really need to generate to supply to those people. So unless we understand the consumer behavior, unless we understand what my demand would be and when it would be, and how my generation is going to cope up with the change in demand. Amit already said that you have megawatt of gas lying right there so that when solar fails or wind fails, I can adjust that. That's really not sustainable. Like we are going away from what Anne talked about climate change and sustainability. We are wasting a lot of resources. How do we stop wastage of those resources? For example, in our villages, with the smart microgrid technologies that we have been able to reduce the capex, reduce the size of the plants. We have been able to provide 24/7 power. Not everybody needs that much power, and not everybody needs the power for everything. So with demand management, we have been able to achieve much more efficiency in the power systems and energy systems than would have been. Like there are many microgrid players you can find across the world, including Africa and India. But all of them have been just generate and distribute and give it whatever they want. No demand management, no consideration of how I can digitally make it much better. Most of our villages are remote. If you go into the remote areas, how do you service them? So operational aspect is one thing that has been missing from this energy dialogue. And we have focused mostly on the operational side, that even for the remote areas, with the help of digital technologies, we can support right from here, right from wherever you are. And that has helped reduce, the shutdown, the downtimes, that have helped increase the utilizations and uptime of our systems, and created customer satisfaction, right? So that is the most important component. And the third component that we must all now consider, we have been just talking about the physical and the cyber domain, but there is a social domain, social aspect. How do we include the behavior of our users into the design that we are making? So we have been doing a lot of work on the cyber physical social systems. How do we bring the social component of our consumers, of our community, into this entire game plan to address their need and focus on the quality of life of our consumers, quality of life of the community, and integrate that into the energy system to meet certain quality of life. So that is the kind of next generation work that we need to do, and it must include these parameters if we want to really create inclusive digital and energy transition. I'll stop there and we'll take questions. I have to compensate for the time that Anne and Amit took. So.
Thank you so much, Ashok. Very, very heartful, and I think very timely. I was frantically typing in the chat on how we forget the other half and how they live. And I'm from India, and it's you get comfortable even later in life, but you don't forget. So thank you for bringing that critical perspective. Unless the other hosts have immediate comments on this, we can open up the roundtable. But I just want to make this option available here, that before we go ahead do that, if the hosts want to comment on what their co-hosts have said so far, please do so now.
I just have one comment. Again, going to the COP agenda, which I think we all need to understand, and why I'm so thrilled to be together with those three gentlemen here, is that at the COP, they are talking about solutions for everybody in the world. So whatever you live in a country like we talked about, Denmark or the Netherlands, or you live in US, or you live in India, or you live in Africa, we need to build a new solid energy system that can be used by everybody. And I just want to give you some stats here, because we need to move fast on this. And we are talking about, like, for example, before 2030, which is soon, as you know, all know, we need to make sure we have that 1 billion people have access to a clean energy, right? Like really energy in a way that is being discussed here. So there's a really bold move here. We also talk about at the COP agenda about 4 billion better jobs need to be created. So everybody needs to understand this is not just a little bit of change we're dealing with here. We're talking about new way of living. We're talking about job creations. And what I love about what Aswak said, the last thing I want to say, we are moving from the industry revolution to the behavior revolution. We are at the beginning of the behavior revolution, where the behavior of us as people will have indirect impact on how the private sector and the countries around are navigating and supporting the people of the world. And that will then have an indirect impact on resources of the world. So it all starts with each of us, right, on how we behave. So I just wanted to leave that, and then back to you guys.
And actually, that is the biggest part, because tell us, even in this room, how many of us are willing to compromise on the comfort and the energy usage that we are used to, right? We are guzzling energy for many things. So the charity starts at home, right? Each of us need to start working towards that goal. Otherwise, it's not going to happen. It's absolutely not going to happen.
Thank you. Thank you, Anne and Ashok. I'm going to go ahead and mute everyone. And we have Shri, who's raised his hand. Shri, over to you. Please unmute yourself, and the stage is yours. And if you'd like to speak, please raise your hand, but keep yourself on mute so we don't have background noise and distraction. Thank you.
Sure. I have a question, and this could be for any one of the three experts here. So we spoke about microgrids, and obviously there's a lot of action there, and there's a lot of action with the hybrid systems, solar storage, and even wind. The challenge with the adoption of DER, when we talk about energy transition, the challenge with the distributed energy resources is finding the value of, I'm getting a bit technical here, finding the value of D, which is distribution, finding the value of G, which is generation, finding the value of E, which is the carbon emission or the environment. So now one of the challenges that has actually not helped adoption of DERs, even though it's happening at a decent pace or a good pace, is the locational value of DER. And I think that has been a challenge for quite some time, is how do we know, I mean, how can we compensate the DERs accurately for their value of D, E, and G, right? So, so I'd like to know, is our work being done on AI in finding the locational value of DARs? Because I see that as a possibility, but I haven't looking into that aspect. Not that I have found anything, significant. So I'm just curious, do you see that there's a potential for AI to solve that problem of finding the locational value of DERs?
I mean, I can probably comment on it. Not that I have a very good answer to the question that she raised. I think it's indeed an opportunity, and I think challenging, because fundamentally, I think part of the issue here is that you're dealing with utilities. And I mean, even though we serve utilities, I think even utilities will acknowledge that they are not the the first ones to sort of try out new ideas, and they are constrained in ways in which they can try it out. So I don't think it's as much a technical problem. I think you mentioned AI. Definitely, we know which areas are congested. In New York, you had the Brooklyn Queens project, which was providing value for distribution upgrades, maybe not as granular in terms of like at a substation level, but at least at a feeder level. So you're seeing more and more of these things. I think it's more a question of, I would say, policy. I think from a technical perspective and from an economics perspective, an easiest solution would be to just create a marketplace and let dynamic prices take care of this whole problem. But I think there are other social issues and practical issues in getting dynamic pricing to work, which means that we have to figure out mechanisms where utilities actually start assigning a value based on locational prices. So it's a little bit more, I would say, policy and regulatory thing than like a technical a challenge that prevents it from happening.
Thank you, Amit. Go ahead, Pramod.
Yeah, if I can add more to that, the issue is who builds the cat on the commercial, actually. And it's more on cross-subsidy offtake of the infrastructure which has already been developed, and the owner perspective on owning the infrastructure then adds the costs of how much he can charge to the new floating grid, which is the virtual grid which is going in. And that's where the problem is. You have the Electricity Regulatory Authority, FERC, but it's a federal body, and the issue is all of these are now controlled by the local Electricity Regulatory Commission. So that way, you don't have a bigger governing body which can dictate the terms and the policies, wherein they can define the cross-subsidy and the charges of someone who has already developed the infrastructure, so that the third party can use it on top of it. So that's the biggest bridge problem. Like Amit said, there's no problem with the technology. You already have it tested, tried in various forms. You have microgrid people already generating power. The biggest issue is a federal authority coming in and saying, okay, this is the platform. You can charge it in this way, and this is a structure.
And actually that issue, we see it even here and in the African countries that we are working at, that the policy is what drives everything. The entire microgrid sort of a movement started in India, but the best policy I have found in microgrid today is in Rwanda, right? And that's where we want to work, that at least they have understood how microgrid should work and how they can compensate, or they can complement the grid. It's not grid versus microgrid. And secondly, as Pramod pointed out on the integration, it's the infrastructure issue. If I want to integrate into the existing grid, then they would say, who is going to take charge of it, right? So the regulatory framework is much more important there, because the technology is there. We can today integrate everything into the grid and make sure that both are stable enough. But it's the existing infrastructure, the cost already gone into those infrastructure, and people not willing to give up those infrastructure is what is holding it much more than the technology.
Thank you, Ashok. Very, very robust conversation, clearly. I do have Sylvia here who's raised her hand. Maybe you'd like to go next. And if there are any other comments, questions, shares, please raise your hand now, because we have around 10 minutes left in the roundtable, and we want to leave some time for closing remarks as well. So Sylvia, over to you. And please introduce yourself.
Hi, everyone. My name is Sylvia, based here in San Francisco. I started an agency, a digital agency, over 10 years ago, serving a bunch of different clients, Fortune 500 mostly. But as I like to say, I'm a creative problem solver, and I like to simplify or try to simplify complex ecosystems, and then try to bring ideas to life, because I think that that's a lot of hard hard work. But I wanted just to comment back on something that Anne was saying earlier. And Anne, I would love to hear your comments on this, because I agree that we are moving into a behavior revolution versus an industry revolution. But also to add on what Ashok was saying earlier, I think it is, I actually find myself a lot in the work that I'm trying to do with many of our clients here in the Bay Area who are trying to move into the system, being a little bit more mindful, aware of their impact, etc. Yes, we are moving into a behavior revolution, but like there's a group of people in the upper half of the world that can actually change their behavior and have a very deep impact. But we are asking of a behavior revolution of everyone. And sometimes I think there's a huge position of privilege in asking that, because even in like your decision to buy something that's not plastic, today it is a privilege check, because the plastic alternative is so much cheaper. And it's the same with energy, right? If you want to install a set of solar panels in your roof here in California where I live, it is something of privilege right now. Yes, there's a lot of incentives, and this year particularly there's a lot of incentives, and under the Biden administration there are. But let's start with the fact that obviously no one who doesn't own a home are not going to install solar panels in someone where they rent. So there's just a lot of things that I particularly would want to better understand how, when we're talking about hopefully changing behaviors, it's something that goes beyond imposing that as a norm for people that have little agency to actually change their behavior, but we still necessitate for everyone to take action. So it's just something to kind of all of us be aware, but I would love to hear yours and everyone else's comments on that.
If I could go first, because you just nailed it, which is probably the biggest design, you can say the biggest design issues that is right now in front of us. There are three things I want to say to this. So if you look at making sure that a behavior revolution of being a sustainable native kind of person that is not just for the people who can afford that kind of lifestyle, because I agree totally that that's the situation at many places right now. And that's where right now, when companies go in and they commit to UN Global Compact, they sign up to SDG ambitions, and they begin to, and that's really where I come from, and why I created SDG ambition to get UN Global Compact was that, you need to go in fundamentally and change the way your supply chain is running, the way when you talk about plastic, that how you replace that with a solution that is affordable, accessible, in an equal way for anybody in the world. And I have had conversations with the private sector about, because they kind of said, but how do you do that? How do you do this? I said, you need to make sure that that is your design principle. So I come from, I'm older than, for sure that you are, right? If I go back into time when I started in the enterprise software world, and there are many implementations of enterprise solutions around the world, right? It was always about optimization and efficiency, We didn't really care about the output, Output needs to have high quality, but we didn't never ever talk about sustainability. It was just, if you look at Six Sigma, you look at Lean, you look at, all those principles. Sustainability, even Michael Hammer in the maturity assessment, for you who are my age kind of know what I'm talking about. Sustainability was like one small piece of the whole framework. What is happening now is that sustainability is the key design principle for everything you do in life, right? Everything you do in life, and what you design is affordable and accessible for equally all over the world. That is difficult, but that is requirement. Then you say, but how do you make sure that then that happen? And that is back to as Håke talked about, and actually so we'll come back to then, if you go into the COP agenda, there is a dedicated line item there on an output which says fossil fuel, like the whole renewable world need to be at the same price or cheaper than fossil fuel. And we know today, it was stated actually as an example in Bill Gates' book, that fossil fuel has the same price as a liter of fossil fuel has the same price as a liter of Coca-Cola, right? And so, you know, we are not going anywhere with this if we don't make it. And this is what the COP agenda is about. We are not going to COP to change the world for the people who can afford to be part of change the world. No, the people who can afford to change the world have the responsibility to change in the way so everybody can live in this world in an equal, right way. That is what this is about. So sorry, you get my whole thing, but otherwise we can't solve it, right? Then it's just become like a luxury add-on that I live a sustainable life and I can do the behavior revolution. No. That's not what we're trying to do. Sorry. Over to you guys.
Just
Thank
one
you so
point.
much, Anne. Thank you.
Just one point to address you. That there is an inherent conflict in what we want to achieve and where we want to go. Everybody wants the NASDAQ and the Dow Jones to go up and up and up. Everybody wants the capitalism to go up and up and up. Tell me one thing, instead of having Teslas, why don't we have mass transportation in the US? Why can't we take bus and trains? The entire Japan moves on trains. Why can't US move on train? Yeah. We want individual cars. We want look at the emissions generated by those individual cars. If we can cut down on those, we are going to bring down it much faster. But no, because there is inherent capitalism involved, there is inherent policy, there is inherent lobbying involved, which at one time LA used to have good transportation system. They had trains that was killed so that LA could be made a city of cars. I lived in LA 7 years, so I know that pain, that how LA is suffering, right? So what I'm saying that we all talk, but we don't talk where it should have been. How do we really transition? The transition is not going to happen just by saying, I'm going to go from coal to solar to wind. You're still going to have the same problem that Amit was mentioning, right? You still have a backup of those systems. Only if you compromise, only if you bring down your standards, that what is normal. The normal is a guy who is traveling in the metro, not the guy who is traveling in the car. Unless those kind of things happen, it is very difficult. And we have been just talking and we have not achieved anything. I'm sorry, but this is the inherent problem.
Thank you, Ashok. Thank you so much. Just very strongly made point and totally spot on. I do know we have just a few minutes left in the roundtable, and we have Darren and Francine who have raised their hands, and I want to bring them here and just have a quick 30 second closing remarks from all the hosts. But we will be continuing this conversation with a focus on utilities in the next roundtable. And I see Elliot and Nora, who are co-hosts, who are already in the room. But yeah, without further ado, Darren and Francine, over to you in that same order.
Hi, everyone. My question is more of a generic one. I just wanted to find out what your opinion was or thoughts are around the production of solar panels, the silica mining and the environmental impact it has. And also if you think about, nuclear and hydro, which is I believe is a lot cleaner than wind and solar. Just your general thoughts around the manufacturing and logistics and distribution impact and, carbon emissions that are sort of reduced from that as well to the overall part of it. But what are your general thoughts on that, and which option do you think is the cleanest?
Can I give the answer for that? If that's okay.
Sure.
Yep. Okay. Darren, first thing is any technology will always have a pollution quotient to it. It is what you call as the recovery part, that is what is calculated. For wind, it's roughly 9 years of generation, which repays what you actually damage the environment in. For solar, it's similarly 11 years. So you have somebody who's taken the effort of calculating how many years it takes. But in terms of coal, and you basically are burning it every day, and you're generating it every day, pretty much. It's not a complete product. It's running pollution. And for example, the nuclear, what you have is more of a radiation and health issues, and the mining, which is really prohibitively really bad. I could give you examples of what's happening in Australia, the uranium mining in India, and all of these places, and the pollution which causes due to uranium mining, basically. So every technology, everything which we do has a negative impact. What we have to look at is what enhances. Does it give you, when you add everything, does it give you a positive impact? And that's where we look at it. I mean, that's where what Ashok, what Amit, what Anna is all trying to come is, it's about human people taking in a behavioral change and moving into things rather than pushing in and saying, okay, this technology is bad, that technology is bad. That's not the solution. You are trying to adopt into the most economical, what do you call as, less polluting technology in a way, and you have to take a behavioral change into adapting to what Ashok has been pointing out, taking mass transit, moving into things like that.
Thank you, Pramod.
Yeah.
Thank you for the question as well. Francine, you're up next, and we have 5 minutes left. So
that's okay. I wasn't going to speak at all, but when he got to saying we should all be taking mass transit, I can tell you, I've lived in Phoenix, Arizona for 50 years, and I've watched a purposeful effort to grow and design the city so that housing was affordable for new in-migration. And that meant that everyone moved out further and further and further. We always used to say we didn't want to be Los Angeles, but we right now are much worse than Los Angeles. And you can't just say, we want mass transit to work here, because it just doesn't. We built it and no one can use it. It doesn't go from one place to another that people really want to go. And that is going to, I used to say when I was younger and more fiery that demands blowing up the city and starting all over again with a good urban design. But truthfully, that's what it does take.
Can I just add to what you said? It is difficult to set up a good infrastructure, but we are also in a moment of time right now where cities, and we would again see that COP, that cities are looking at themselves right now to be resilient because of the whole COVID that we all have been going to, are going to, and that cities are being redesigned now to be more resilient, to have better infrastructures. It's also where a lot of the investment is coming from governance. And I will see again my Danish card here. If you look at Denmark have a really good living, but Danish people have, in Aarhus, a Danish family probably have one car if they have a car, but they have many bikes. So, and they have really a good train infrastructure. So of course it's about building an infrastructure with bikes and with trains and buses that is so efficient. It doesn't mean that you have a worse lifestyle because you don't have, in US you have so many cars per household. You don't have that in Denmark, for example, right? And so I think there's a lot to be learned and I think if you guys know P4G is an organization that works with governments and with infrastructure. I've done that for years about electric buses and other stuff. And I think there's a lot to be learned from other countries, just what Ashoka is doing. I love the fact that he used India and he used US, and he now go back to US. He told us, and you are going to replicate what he's done in India and Africa to help to build a better infrastructure in US and all the way around. So there's a lot to be done for sure on it.
Thank you so much, Anne. We have just 2 minutes left, so maybe 30 seconds. We can have closing remarks from all the roundtable hosts. What a tremendous conversation. So Amit, Pramod, and Ashok.
Sorry, I was on mute. Yeah, no, great conversation. I think a lot of good ideas. My only comment is that there are a lot of low-hanging fruits which are uncontroversial. So let's at least get that done as soon as possible, then we can worry about some of the more controversial things on like what is the right choice that people have to make. I think some things are just cheaper, faster, better. There is really no trade-off, and that can already make a huge impact. So I think if we can align people and educate people around that, that's actually going to move the needle.
Thank you, Amit.
Well, why there are, while I agree that there are low-hanging fruits, but it is also true that if we don't take stand, the cycle will continue. So there has to be some way to address short-term as well as long-term needs. And that is where we need to focus. That is where COP needs to focus. That is where the regulatory bodies and a platform like this should focus. That there are business as usual, but how do we make case for business unusual? And that is going to what going to change things.
I have a little bit of a moment here. I have to say, I'm going to go ahead and put Pramod and Ashok on mute for a second here, which is, this is kind of the typical narrative of the US where you don't rock the boat too much. And strong thought leadership that always has been coming from India past 5,000 years, I guess. And I've sat in WTO's discussions and I've heard heated discussions when I was working at the UN Environment Program in Geneva. And I kind of see that playing out a little bit. So just wanted to make a little comment here, Amit and Ashok. All right, Pramod, your final remarks. We're already a minute late into the next roundtable, but we're ready to go, and we want to keep everyone here because the topic is fundamentally the same with a specific spotlight on utilities.
I don't want to take too much of time. I just say I agree with what Amit and Ashok has said. It needs to be something which is to be top down, but you have to look at bottom up also. So it has to be a combination of top down approach from the government side and a bottom up approach of educating people straight from school, wherein you talk about clean technology so that it's ingrained in the kids' mind when they grow up, and a top-down approach would also help in that way.
Awesome, thank you very much. What a fantastic and animated discussion. I would like to thank Anne, Ashok, Amit, and Pramod one more time, and please do stay back. This is the final session of our 2-day roundtable series, and it feels like we're just getting started. So we want to keep you here, and we want to invite you for the networking session that follows as well on this really cool platform that mimics real life movement from one circle to the other. We've sent out calendar invites, so do join us. And with that, I'd like to hand over to Elliot and the other hosts. I know all of them are here in the room with us.
Thank you, Navroop, and thank you to the prior panel for the tremendous platform that you have provided to us to build on and to talk about the spotlight on utilities, digitalization, disruption, and new business models. We have some tremendous co-hosts of this session. I'm going to very briefly introduce them in just a moment, but the emphasis, as you all have seen, if you've been in prior sessions, or if you're new to this session, the emphasis is on interaction, on conversation. And so we are going to do our lightning round of presentations or sharing our thoughts. And then we'll be looking to you to enhance and build upon those. One of the hosts in the prior session said something along the lines that utilities are not always the first to innovate. That is, I think some would regard as an understatement. Some would agree with that. Certainly with regard to digitalization, the utilities are not first adopters and are fairly early on, I would say, some would say in the starting blocks. And we're going to talk a lot more about those issues and about the opportunities. The utilities have been the bulwark and really the backbone of our energy and power supplies for decades, if not over 100 years. And so now we're at a point, at a flex point, where we need to think about a significant transition, even revolution, in all of that. So with that, by way of a few opening remarks, the four co-hosts of this roundtable are Nora Mead Brownell, Tara Kalshik, Carl Rabago, and myself. Nora Brownell, you may, many of you, if not all of you, may know well as the former FERC, Federal Energy Regulatory Commissioner, as the former Pennsylvania Public Utility Commissioner, as the co-founder of SB Energy Solutions, as the former chair of the board of Pacific Gas and Electric, and I've been on the board of a number of other companies, including National Grid. Tara Kalschik, the former partner with Holland and Knight law firm, and now the managing director of one of the largest, most innovative investor-owned utilities in the country, if not the world, Southern California Edison. Carl Rabogo has been a bulwark himself in the energy industry, former commissioner of the Texas PUC, deputy assistant secretary at DOE, and a former executive with Austin Energy, with AES, with Rocky Mountain Institute, and currently the chair of the board of the Center for Resource Solutions. And myself, an advisor to the Digital Economist, managing or program director for the United States Energy Association's Electricity Market Initiative, and a longtime consultant with my own firm, Strategic Energy Advisors, as well. So we're going to start this conversation with Nora Mead Brownell. And Nora, the floor is yours.
Thanks so much. I'm honored to be with such a distinguished group and hope we'll have a lively conversation. I thought I'd talk a little bit today about the drivers for change in a sector that is notorious, frankly, Elliot, for not wanting to change and has every reason for doing so. And then I'm going to talk about a little bit of the opportunities that I see, because I think the utility sector and the way we produce and deliver energy is not well understood, and there are amazing opportunities out there. And then I'm going to talk about the need for new business models and the barriers to change, but I'm going to be fast. So pretty much everyone knows we have aging infrastructure. The average transmission line is over 50 years old, and at PG&E and most recently in the East Coast, I worked with companies who had towers that were over 100 years old. That expected lifespan is generally about 50. But even that is being changed by the second driver for change, which are extreme weather conditions. And for the 4 people in the universe who don't believe in climate change, we can call it whatever we want to, but it's happening. We have about $150 billion worth of outage costs a year, and we have more outages than any other developed country. So when you think of electricity as not only a human need, but an economic development issue, we need to get serious about this. We also have obvious cybersecurity threats and actual physical threats. We have terrorists around us, homegrown and other, and we need to be prepared for that. We have, and the good news is expanded deployment of renewables, but we have them on a grid that was built for fixed central generation, and that is no longer fit for purpose to deliver what we need and what we want. We need a grid that's bi-directional, that can handle intermittent resources and distributed resources. We have, unfortunately, huge congestion for renewables to get on the grid. We have changes in customer expectations and changes in demand. We're going to have broader deployment of electric vehicles, but we're also going to have a customer base who are used to knowing what they buy, having choices in what they buy, and knowing the cost of what they buy. In almost no other sector do we have that price opacity and the inability, but like Texas, and that's going to change. The good news is, in spite of huge barriers to entry, there have been a proliferation of new technologies enabled by the transformation of the digital economy. And the bonus is these technologies solve for multiple problems. So investment is not one-off. A couple of quick ones. Digital meters, that seems so simple. Who has an analog mechanical radio in their house? Well, half of the United States has meters that don't give information, that are not bi-directional, that cannot share information to manage outages better, reduce truck rolls, which has a significant impact on carbon footprint, and to give better asset management. Dynamic line ratings allow us to optimize the existing grid. We do need to build new transmission, but in the meantime, we have enormous opportunity to get more of what we got. Topology optimization, it allows us to redirect and rechange and reconfigure the grid in terms of storms, in terms of cyber, in terms of any other thing that might happen to it. It's faster to deploy renewables, and it helps with storm restoration. Power flow control automatically switches so you're not dependent on human beings. An enormous number of AI applications which allow us to predict to model and adapt. So we've built a grid that was built on the expectation that it was static, and we now know that that's not true. So we need to be able to respond not only to conditions, but we need to include context, and we need predictive technologies. Why are these great besides of all the problems they solve? They solve money, they give us data so that we'll have better planning, we'll build the right things in the right places. It'll be more transparency, and it's a much faster path to a carbon-free future, in addition to the obvious of reliability and resilience. The barriers are big, and they are political, and they are powerful. The utility business model, in fairness to them, rewards what I call the big honkin' project strategy. The more money you spend, the more money you make. We need to change that. We need to incentivize the new technologies, which again are lower capital and therefore better for customers, have more of an impact, frankly, and are in the low-hanging fruit category. We have a risk-averse industry, but I think behind that risk aversion is really a desire to preserve a monopoly business model, often vertically integrated utilities, that worked for its first 100 or so years, some would argue not that many, but doesn't work for us in the new challenges that we have. They also are threatened by the transparency that all this data will bring. In every other opportunity we have in transforming business models, we use data. And in this particular industry, we have a lot of it, we just don't use it, and it is not available to all the decision makers. We need to reward the right thing. We need to have performance-based rate making, and we need to hold people accountable for solving the problems that society, I think by and large, has identified needs solving. Second, we need to change the regulatory model. We need to educate regulators who don't have the opportunity to see these new technologies. And we need to educate investors who are inclined to love that monopoly because it's predictable until the day someone turns the lights off, and then it's not so much. The other obvious opportunity is for us to share these technologies in the developing world where they are building their grids, and we need to build back better, but we can help them build right from the get-go. So I think there's an opportunity for huge impact all over the world and huge impact on our carbon footprint. That's it.
That's it? That's a lot. Thanks.
Well, I could go on for a long time, as you know.
No, I know you can, Nora. So, but thank you for teeing us up marvelously. And Nora has thrown the gauntlet down here. So all of you who have been listening for the last 5-6 minutes now have something that you can tee off of and talk about as soon as we're through our lightning round. So let me turn now to Tara Kaushik with Southern California Edison. Tara, the floor is yours.
Thanks, Elliot. Appreciate the introduction and the opportunity to be here. So thank you to our hosts and all the folks who are participating in this roundtable, and to our attendees. So I'm happy to be here, Tara Kaushik, Managing Director of Reg Relations in SCE. Just wanted to note that most appreciate Nora's comments, particularly because we have been on the forefront as the second largest investor-owned utility in California, teeing up these issues for our state commission, among other places. In fact, we actually put out a Pathway 2045 paper giving California's goals to be completely net zero emissions by 2045, and the pathway that we need to act on now in order to get there. We certainly don't have much time to meet those goals, given that we're talking pretty quickly about targets we need to hit by 2030, and then make the longer goal targets by 2045. But we also issued a white paper this year, or excuse me, the end of last year, called Reimagining the Grid. Really getting at a lot of the points that Nora just made in terms of what do we need to do to integrate new technologies into our grid now, like starting now, in order to have the infrastructure that customers are going to need in order to plug in their electric vehicles, in order to electrify buildings and transition away from natural gas as California wants to do. We have a lot to do to get there. So just want to note that, Edison has actually done a great job to really think about these issues carefully and see about what sort of grid changes are needed to address three big challenges. And sometimes I like to say that, challenges make us actually think of innovative solutions. I feel like digital transformation is certainly one of the key ways for us to meet these challenges. And they are, safety, of course, with respect to wildfires in the West, that's a huge issue right now, an enormous issue. Decarbonization, which I just mentioned, having to do with clean energy, integrating it into the grid. Resiliency, right? So it is related to maintaining safety, maintaining the system integrity for customers to continue to get their electricity in a clean way. Security, which Nora mentioned, notably, we need to make sure that we have a secure grid in order to really be able to transform it safely and to protect against incidents, which seem to be on the rise recently. And reliability. I think everybody's heard about the power outages that occurred last year in California because of grid constraints on capacity, and just really meeting load, became a huge challenge given the way that the grid is constructed right now, and given the rising load that California is facing currently. And that's certainly not going away. I do want to say that, our state agencies have been working together along with the governor and with all of the investor-owned utilities in California to meet those challenges. But technology has to be a huge part of it, right? We're talking about microgrids, we're talking about procurement of energy storage. And so really just wanted to note some of the different ways that we're seeing technology having to be used, and actually developing plans in order to do that. And it's not just the development of plans. I do want to say that we have started actively in the space to procure the resources that I'm talking about for reliability, also to develop AI and automated type of technologies to do grid inspections for wildfire safety, for instance, or to handle maintenance and operations in a more efficient way, in a higher quality way. As you can imagine, we have quite a few miles of, over 100,000 actually, miles of transmission distribution lines to harden our grid. And in order to do that for wildfire safety, the quicker the better, right? And the higher quality, the better. To use technology for our maintenance, inspections, fixing things in real time if we can, weather stations, etc. Drones, aerial, equipment, all of that. So these are just some of the things that I'm naming quickly in terms of the activities that we're doing. And I certainly welcome the discussion from everybody as to, how we can continuously improve. I think that as a whole, the industry definitely needs to get there. It is a regulated industry that in the past has risen to meet a lot of challenges, notwithstanding the monopoly structure and a lot of what's going on with, customer expectations. And we hope that, we can continue to be innovative to adapt to the change that is imminent here. Thank you.
Outstanding. Thank you. Thank you, Tara. You emphasize the vital role the utility needs to keep doing what it does well, but also make this tremendous, in some cases, 180-degree turn and adopt new ways of doing things. As you said, new technologies. Nora, you emphasized the new relationships and the need for regulatory education, and obviously, Tara, that's something you're right in the forefront of as well. So not a staid industry by any stretch of the imagination anymore. I don't think it's actually been one for quite some time, but the pace of change is breathtaking. Okay, let me turn now to Carl Rabago.
Thank you, and I found the unmute button. Thanks everybody for being here. Thank you for the opportunity to be part of this illustrious group of smart people. So I'm going to try to keep it down to just a couple minutes because so many great things have already been said by Nora and Tara. I'm going to I'm going to start with just sort of maybe a little sort of controversial, perhaps, or inspirational, I don't know, statement for you to think about. When it comes to electric service today, I think it's a fair question whether the grid we would build if we started building today, the business we would build if we started building today, the system and the markets we built would, if we started building today, would be the same as what we have. And I think the answer is probably no. It's probably true in a great many aspects of our lives. But it raises the question of how do we take the existing investment, the history of investment, the systems that are working very, very well, and leverage the power and the capability and the information and the understanding into what we would want to have if we could build it from scratch today. Turning 180 degrees might have to be 1 degree at a time, right? So the questions that we want to have to get really into discussing is what innovations are the most relevant given the context we have. And you just got great context. I'm going to offer you 5, just 5 to sort of get onto the list. And what I'm struck with is how much they remind me of the kinds of things we were talking about when we first started going through the information revolution, gosh, 30-some years ago. First, disintermediation. Do we really have to go through all the levels and actors we have to get what we want out of the system? Or are there pathways that could be enabled through improved use of information, improved access to markets that would result in customers and market participants being able to reach directly to the solutions they seek and the services they can provide? Second, and this relates to it, market access. Here, especially in the United States, we take great pride in being the world's most successful free market capitalistic society the world has ever known, although there's a lot of countries giving us a fair run for the money now. Free market capitalism seems to be a good organizing principle, yet one of our most important critical infrastructure businesses is the electric utility business, which still operates as a regulated monopoly. Why is that? And can we provide market access and fair rules of market participation to incumbents that will leverage the power of markets? Third, big data. The electric utility industry grew up in a world in which we had to be stingy with our computing power and stingy with our analysis because the system seemed so big and our computers seemed so clunky. We are now in a completely different world, but only in the past year or so have we actually gotten new models for utility planning that are built around embracing and thriving in a world of big data. In tens and hundreds of billions of dollars of utility planning that has occurred over the last 30 years. We have done it based on the analysis from models that have very little scope, very little capability to actually understand the way the system is working. That's changing and we have to take advantage of it. There was a term that was introduced by another FERC person, I think, or at least he gets the credit, John Wellinghoff pushed a big conversation about transactional energy, thinking about little tiny things. We've had conferences in the past about RFID chips being attached to light switches and tracking transactions and compensating for transactions or charging for transactions that were on such a nano scale that we could really change the entire fabric of how we use electricity and what we have to provide for it. We still need to get there, but we don't have the granularity in our markets and our systems and our analysis and our planning that we need to. So those innovations are necessary. And then finally, and I think most importantly, this has got to devolve, all competitive markets devolve towards empowerment downstream. Customers end up being the managers of market surplus. There goes my Pumas. They become the managers of market surplus, and market surplus moves downstream to consumers as we add competitive value. So how is it that we can put competitive power, market power in the hands of consumers in a world in which monopolies dominate the market power landscape? And most important, how can we do this in a way that we, for the first time, we're seriously asking that is just, that is equitable and rational across the entire spectrum of humanity out there that depends on electric service for just living in day-to-day lives, not to mention the hundreds of millions who don't even have routine access to it. So those 5 areas: customer empowerment, transactional energy, big data dependence, market access, and disintermediation are innovations that I'd push for and love to talk about. Thanks.
Fantastic. Wow. Again, I invite you to be thinking about writing down your questions, because after I have a few remarks to make here, it'll be your turn. Thank you, Carl. What I'd like to start off with is the statement that for the vast majority of its history and continuing today, the electric utility industry in particular has been highly capital intensive. And so what we are, I think, on the cusp of is talking about how to integrate that physical reality, that capital intensivity, with digital features. And also, as one of the hosts on the prior panel said, as Ashok Das said, with social sensitivity at the same time, and making sure that we are staying responsive to customers and to their changing needs. There's no question that we are becoming more dependent on electricity in particular. It's really hard to imagine our modern lives without a reliable, secure, sustainable sources of electric supply. It's not just these devices, it's our whole communication system. It's our whole ability to buy and sell things, transactions. It's increasingly our transportation system, and it will be increasingly so in the future. So we are becoming, it's industrial processes that are becoming much more electric oriented. So we actually, electricity, I would argue, is a pretty good deal in terms of what we pay for it, in terms of the value that we get. If you look at the value of our GNP versus what we pay, it's a lot higher value per kilowatt hour than we actually pay for it, but it could be a whole lot better than it is. So what are the major challenges that utilities are facing? I'll go real quickly through them because some of my prior hosts have mentioned a few of these. Climate change and decarbonization. It's not just a question of emissions from generation. Pick your favorite catastrophe, fires, floods, droughts, hurricanes. The IPCC report, we need to deal with the challenge that climate change has squarely put right in front of us. We can't push it off any longer. We need a more resilient system. Consumer empowerment, that's a huge issue for utilities. With more distributed energy efficiency, distributed generation, electric vehicles, community solar, you name it, the list goes on. We need, and the utilities need, a way to integrate that to deal with prosumers. They're not just ratepayers anymore. They're participants in the energy and their own energy supply increasingly. Another issue is, as Nora well pointed out, aging infrastructure and the need for ongoing maintenance and replacements. COVID, I think, I would argue, has made not just a temporary, but I think we're going to see a fundamental shift in the pattern of energy and electricity usage, probably more towards residential, less away from commercial real estate, much more towards remote employment and participation. So that's going to have significant challenges for utilities as well. Rates and rate structures, huge area. Tara is right on the forefront of this, but utilities have collected money for decades, mostly based on variable rates, based on the amount of consumption, when their costs are largely fixed. And as you go towards more renewables, the costs are becoming more fixed, actually. So real questions about rate design and rate structure. Renewables integration, the intermittency and the balancing and the volatility that's introduced by that. And then lastly, new technologies. There's storage and hydrogen, and Nora mentioned a couple of the grid enhancing technologies like dynamic line ratings and others. Those have to be integrated somehow as well. So, take a breath. All of those issues, all of those challenges, I would argue, can be enhanced by the introduction of digital technologies. Digital technologies can help to identify where a disaster is taking place, where the problems are on the grid, can possibly fix things remotely rather than having people to go out there. It can detect cyber attacks at the same time as we are open more to cyber attacks. I'll get to that in a second. Digital technologies can provide more maintenance and upgrades as needed, not just on well, we do this every 2 years kind of basis, but more predictive analytics and just-in-time types of maintenance. A lot more ability from digitalization for customers to participate in markets. There's thousands of ways that you, and points now through electric vehicles, through storage devices, through rooftop solar, where customers are going to be as much a part of the electric power supply and reliability system as the large power plants in the future. Digital is going to enable the collection of the data and the aggregation of that into something that is a synthesis that can be utilized for the integration of the grids. And by the way, the long time separation we've thought about between the wholesale grid, the transmission grid, and the retail or distribution grid is melding. Those two are melding together rather quickly. Wrapping up here, the utilities will also benefit if they could adopt digital techniques more for their regulatory purposes, to justify the need for regulators to revise their rates and to shift to more dynamic pricing and to maybe more fixed rates where appropriate. It is finally, digital technologies will give rise to better system balancing and greater help for utilities to anticipate the adoption of new technology. So digital is not a panacea. It's not a panacea for everything, but it can help the utilities to deal much more effectively with a lot of the issues that I named earlier. All of this will require a lot more upfront investment. It's not free. It's going to require extensive data collection and analysis. It's going to require extensive training of existing staff and new staff. It's probably going to require revamping of utility divisions to be more customer oriented. It's going to require utilities to think more competitively, because there's a lot of companies that would like to get a share of the customer energy and electricity market. And utilities are going to have to start thinking and acting more competitively. You know, as they say, if you're not setting the table, you may be on the menu. The utilities are going to need to think differently about their revenue and their cost structure and financial planning, because the flows are not going to, they're not just building things that everyone is going to pay them for. Customers have a lot more control over that now, and they're going to probably need to revamp their regulatory approaches and relationships with regulators, because regulators are going to know that the information is available to them and are going to have, I think, increasingly high expectations. So it's an opportunity as well as a challenge, and that's where I will conclude my remarks. Okay, so now it is your turn, and I see Navroop, you have put your hand up. Why don't you lead us off in the conversation?
Thank you, Elliot. I just want to start by saying there's so much content here. I just feel breathless. What a pace. And indeed, so for the last roundtable, I just wanted to make 2 points. The first is tying into the larger theme of the summit, which is going beyond stakeholder capitalism towards shared value that we touched upon in every single roundtable. And I just think this has wonderfully brought that point home. And with bold commentary around here, we're dealing with monopolies, right? We're talking about this, but well, what's really happening on the ground? I see a comment from David here as well, which is this US centricity, almost overconfidence when you're, in the world. And when you're living here, you don't even see news from other parts of the world. Like, you have to literally dig for it, unless it's, I guess, Iran or Israel. I still don't know why. That's those are beloved to the US. It's a mystery to me. And then the other point is around just bringing the whole point back home, coming full circle. We started with the first session yesterday on our sustainable future, decarbonization, decentralization, and democratization. And I think this roundtable has just so wonderfully brought that full circle while we explored data and then the usage and the privacy of data to utilities, to smart cities, to the future of work. And I just wanted to share this here because obviously not everyone was on the entire duration of the summit, and many of you joined just this roundtable or from the one before. So back to you, Elliot, and I think Shri has raised his hand, but I just wanted to share those insights I just feel very energized with all the comments from the hosts here. My anticipation was this to be a very technical session, but I think just a very humanistic, in-depth, and bold commentary that I've heard. I just feel very proud of everyone. So thank you very much.
Thank you, Navroop. One quick interjection I'll make before I turn the floor to Shri. Utilities are not monolithic. I mean, you just heard from a very progressive, forward-looking utility from Tara at Southern California Edison. There are almost 3,000 utilities just in the United States, right? There's almost 2,000 municipal utilities. There's almost 1,000 cooperative utilities. There's dozens of investor-owned utilities. They are not all the same, and they are all, in some cases, facing similar challenges, but we have a challenge not only domestically, but as you also just pointed out, internationally with the adoption of these kinds of changes too. Shri, take it, your turn.
Thanks. I have a small question to Carl's point. Carl, you mentioned about utilities turning to big data, right? And that's been happening since the last 1 year. So my question is, how big a problem is the data ownership problem? And how do you see that changing the business model of the utilities?
It's a wonderful question. It is not as big a problem as it should be because there's not a lot of things we can do with the data, right? And not a lot of things that are being tried to be done with the data. Right now, I think it's being gathered in a whole lot of ways. We still have, we're starting in the United States and other places to have high penetrations of smart grid systems that are amassing huge amounts of data, but it's not being used or mined virtually. Customers are beginning to demand it, usually through intermediaries of energy efficiency or distributed generation service providers who are asking the utility to provide it. We kind of pacified ourselves in the United States with the green button standards, but it's very hard to get a hold of your green button data from utilities these days. So while we're gathering the data, we're not making yet good use of it. We don't know why we want to ask for it. We don't know what we could do with it if we had it. So in that sense, it's not yet that big a problem, but it should be a bigger problem because we do need to figure out who owns the data about my usage and how and how do we securely provide a data-rich environment? That's a big part of, I think, what's on the agenda for the next several years.
Yeah, Nora, you made a comment about not using data effectively. Why don't you jump in here?
Yeah, I think actually it is a problem. It's already a problem, and it's reared its ugly head. When I was in Pennsylvania, they dealt with it in Texas, and there's some organizations arguing, like AARP, that it all should be withheld. Well, you can't really, as you pointed out, Carl, you can't really get the value of the markets down to the customers unless they can access data. In my opinion, it's waiting for a big court case, but the bottom line is the customer owns the data, and the customer should be free to get it, to share it. It should be available to market participants. We did have a court case in Pennsylvania when we went to retail choice, where we developed a great market, but we just didn't have anybody to sell into it. The fact of the matter is the utility said no one can have the data, and if you really want it, you have to sign a document, et cetera, et cetera. I dissented, and the courts actually upheld my dissent. I came in one morning, there was a great sign, you won, you won. That the customer did in fact own the data. But I think this is something we need to push forward because the utilities are gathering it. Some of them know how to use it. I think SoCalEd is a leader. I think a lot of this data and technology has helped enormously with fires in California. But in other countries, someone raised the issue, we feel like a third world country. In some ways we are. If you look at how parts of Europe have restructured, particularly in the UK, there's transparency, there's a separation of generation and the wires, and that works. So I think it is an issue, and we need to make sure it gets elevated fast so we don't lose another 10 years.
Tara, do you want to jump in on this? I noticed you nodding your head during some of Nora's remarks.
I mean, Nora hit the challenge on its head, right? That is the challenge, is that customers do own the data. We've certainly in California understood that from the get-go, but of course, the regulatory framework holds that information sacrosanct, right? Like we have a duty to keep it private at all costs unless the customer actually consents to releasing it. That being said, we had to work through that process with our energy efficiency programs, right? It is at a stage now where third-party administrators are hosting sites for our energy efficiency programs, but it took a while to evolve there because we had to figure out, how do we obtain these consents and make sure that there are controls on this information not getting out. Also, to my point earlier and Nora's about security, right? If enough of the information gets out there, what are people going to do with it? I think we're dealing with that as a country on many different levels, even outside of this industry, right? But the question being, let's do it, let's get there, but how do we do it safely? And I think that the solution is there and should certainly be talked about, even on, with respect to the safety of, having customer choice and utility pushback on that has been, heard about throughout the US. I do want to say that, again, in California, we heard our customers. They wanted to form their own community choice aggregation models where generation would be obtained from cleaner resources sometimes, or, just from other places. And we've partnered with, sort of nonprofit government entities. That's what community choice aggregators are. We've partnered with them to, go ahead and use our infrastructure to deliver the energy that folks need. But they have a choice as to whether they can do that or not. And there are about at least almost, I hear, something like 20 CCAs forming in California itself. So we know it's doable, we do. But I think using the data effectively within a regulatory framework that supports it is very important. And we have to have controls in place to make sure that that happens effectively.
Fascinating set of issues. Well said, Tara, and all.
Can I just add?
Go ahead. Sure, jump right in.
We're talking about consumer data, which Tara is absolutely right. It's complicated, but it's doable. I also want to shine a light on system data. So we now plan based solely on kind of a closed system where the utility does the modeling, maybe hires a couple of consultants like you, Elliot, but there's no shared system data so that there can be competition in offering the solutions, so that there can be a real evaluation of, and it's not always lowest cost option. I know regulators love that, but that's not always the solution. So I think the data issue goes well and beyond. And frankly, some of this data will also allow us to understand what utilities are operating efficiently and what are not. So there's a lot of threats when you start talking about data. And we need to overcome that. I mean, people share their lives on Facebook and God knows where else. And yet we make a big deal about, what is a very small piece of information. The larger issue to me is some of these bigger kind of trust but verify. I want to know how planning is being done in this country to deal with environmental issues, customer issues, affordability issues, and frankly, best possible outcome for the longer term.
Right, great points. I'm working in Southeast Europe, but it's true in this country as well, that the data about where to interconnect renewable energy projects and the cost of doing so and the availability of the grid, that's not something that should be close. That should be available so that we can optimize the amount of renewables and the amount of other resources on the grid. Let's bring in some other voices here. Dr. Bhaskar. Dr. Bhaskar,
yeah.
I see.
Yes,
please.
Thank you for giving. Vis-a-vis stakeholder capitalism, I am looking at utilities with the perspective of proliferation angle of the utilities. So I will like to divide it like pre-pandemic, post-pandemic, and restructuring and the changes in the contours of utilities, like industrial to residential, as we saw, because we are working from home, more emphasis on Zoom conferences, webinars, so more tele data, is going to be used more, internet is getting more residential usage of internet is having. Then the second categorization I will look at urban and rural data of utilities. And then further segregation will be non-users and under-users of utilities. Because there are, we are talking right now about the urban sector where utilities, how utilities are getting transformed and structured and restructured with emphasis on the data management, data privacy, data ownership. So there are so many areas, so many places which are where there are no utilities, or there are utilities, but still not for the full population. So they are underutilized utility provisions. So how do we resonate about this? Because stakeholder capitalism, ESG, circular economy, then our environment crisis, and utilities situation vis-a-vis financial inclusion. There are so many loose ends and rough points that I don't see how to mix and merge all these points. Thank you.
You've raised certainly a non-trivial issue. You know, I mean, it's not just say between developing countries and developed countries, but as you said, rural versus urban. There's always been kind of a compact. You know, that the areas that were probably a lower cost to serve the incremental customer, like urban areas, would subsidize the areas that were further out and in the boonies, so to speak. You know, you got you've got utilities here that serve maybe 5 customers per line and others that serve 5,000. You know, so, you know, there's a fundamental distinction there. And Tara, I don't know if you want to make any comment on this, but when you're looking at, you know, thinking about how rates should be structured, we've had these rate classes of residential, commercial, industrial for years and years. I would imagine that you and other utilities are thinking a lot more about, you know, whether or not those are the right buckets and whether or not we need to make other kind of distinctions. Do you want to make any comment there?
I'll with respect to our, excuse me, there we go. I thought I heard feedback. I'll just make a comment with respect to rate making models. I think that, you know, it's certainly over the years has always been an understanding as to, you know, how are costs going to be allocated, right? Is it going to be, for instance, you know, commercial customers, industrial customers that subsidize a little bit of residential rates so that they're not so high? You know, in the past, I think a lot of state commissions have taken some form of, you know, that sort of balance to be able to make rates generally affordable for each class of customers. But I think, frankly, that the pandemic sort of called all of that into question, right? I'd say that, you know, it certainly was a question before, but, you know, things like a huge pandemic, a global pandemic that drives everyone to suddenly use their residences for all of their electrical needs instead of commercial buildings or offices could, you know, certainly shift that, right? But not only that, given all of the infrastructure needs and investments that we need to do with respect to safety and clean energy, as we've been talking about, a lot of capital that needs to be invested there, you know, that's going to come at a cost, right? So I think, frankly, that the question really calls into question, really hits on the issue of affordability and equity, and how do we make sure that we have equity, especially as we transition our grid into something more efficient, something that it more integrates clean resources. That's going to be a key question to address with respect to the rural versus urban, but also the, you know, customer class kind of balance. Is it a question, I'll just raise it, as to whether all of that should be on a utility bill? should we think about legislation, for instance, either on the federal or state level, that would help folks with this transition, that would help folks, for instance, with arrearages related to the pandemic, that would help folks, sort of look into the rate design issues, that's important, but also provide some sort of alternate source for larger societal benefits that we're talking about here. I'll just raise the question, but it's certainly something that's come forward. I'll just say at our state level, there was an en banc hearing on affordability that the California Public Utilities Commission held this February, precisely related to this topic. And one of the great suggestions, presentations that came out of that was by Severin Bornstein, among others, who really called into question, what are we doing with our rate design? Are we looking at fixed costs too narrowly, right? Should we actually think about income-based, models? Should we actually think about regional models? Should we actually think about, alternate sources of funding for costs that we think are going to continue, for a larger societal benefit rather than just the utility ratepayers?
Right. So, fascinating.
I don't mean to say just the utility ratepayers in terms of, they're very important, but should it be a larger conversation?
Right. Each of the topics that we're bringing up here could clearly not only occupy the whole hour, but, a whole day, or en banc session, of this smart group. But in the interest of covering as much as we can, thank you, Tara. I see.
Elliot,
Carl, you want to jump in?
I just want to throw in a really quick point that's important, because as we've gained the ability to understand things like, customer usage patterns and the conditions of the grid, spending billions and billions of dollars making the grid, the insights that the utility has smarter, we understand that customers are not monolithic, they're very different. It is important to remember that precision does not necessarily equate to justice, right? We had an experiment in the United States and all across the world where we decided that the biggest customers would enjoy short-run marginal cost prices. And as a result, huge infrastructure costs were shifted on customers who had to bear that, or had to bear the infrastructure costs associated with being captive because they didn't have choices. So as we understand better, it's going to be critical that we also keep in mind principles like justice and fairness. Everybody who's ever worked in a utility knows that electricity doesn't cost the same to make at different hours of the year, and that some customers are subsidizing other customers, and some customers are subsidizing each other at different times in different directions based on the way they use electricity. But we've done this as a common social enterprise. So all our smarts are not going to get us to a point where everybody's going to get their perfectly individually tailored rate, because we won't be able to supply electricity for everybody if that's what we do. Striking the right balance of the public goods nature of electric service and the private good aspects of introducing market forces has always been the challenge, and it's a challenge everywhere. We'll get smarter, but we still are going to have to exercise some judgment.
Thank you. Thank you. Well said. Let me turn to, it shows up as Project Moon Hut on my screen here. Introduce yourself, please.
David Goldsmith. I was the one who wrote the comment on the side about being myopic. There's two things that, as I'm hearing the conversation, that disturbed me, and maybe one or two or three people can address this. The first one is timelines, and the second one is 7.5 billion people. Those are the numbers I always start with. I don't start with a country, I start with timelines. And the challenge that I hear is, being in now back in the US for a period of time, there seems to be a supply-demand type challenge of how long this will take, what do we need to do? And having worked with the TVPPA and other organizations, their belief structure is based on the construct that you don't own your building. You don't own it. Because if we turn off your electricity, you have a brick. So while you feel that you own it, and we tell you that you own it, in private, I've had discussions and they say, that building over there, that's ours. we power it, and without us, we're not around. And at the same time, they're talking about infrastructure that's falling apart and decaying, while other parts of the world are not looking at it the same way. They're reinventing how they look at it. Companies like Siemens are trying to figure out how to be able to, within the infrastructure, be able to know what your demand is, what your usage is, what your rooms are, using IoT devices to be able to see utilization of space, utilization of times, so that data can then be used to negotiate or just to run demand models across a larger scale. Your business, your home is, or your office has 30% vacancy, and yet you're running all your lights in all your rooms. Maybe that infrastructure could be tied together. So the challenge is, I think on a global scale, is there's no push on the timelines. It's going to be, based upon this conversation, 30 to 50 years before we address most of the challenges we have here. Easy. And when I sit in the rooms with the, I'm just using one, I've done others, TVPPA, they're all gray hair. There is no incentivization besides economic for them to take the moves that they need to. Now in Singapore or India or China or Vietnam or Cambodia, Malaysia, Singapore, go around the world, you can go to South Africa, it doesn't matter. They're starting to say, we can't run this way. How on a global scale can we change that conversation? Because we don't have 30 to 50 years. And we're talking about it country by country. Bitcoin's utilization is 7% of the world's population, or 7% of the energy uses of the planet. We have to make changes quickly. So how do we do this in 10 years or 12 years and not just be speaking about it?
So David, what do you think utilities need to do if they want to stay relevant? If they don't own the buildings anymore, for example, are they? What needs to happen quickly?
So I won't use the U.S. I'll use in general. Is that it's not about energy, and that's where I think the ecosystem has evolved. It's not energy and utility. It's optimization of the resources that are around, and it can't just be a utility structure anymore. Their model can't be, we make all our money off of this. It's a diversification of portfolio. We own some of the real estate. We're engaged in the other infrastructure projects, because in the long run, once the individual has their own power, meaning they can look at their meter and say, I have a 35-story building, and I can show you where, how, and when it's being used. I'm going to come back to utility company, and I'm going to make your life miserable, because I'm going to show you that I can now source it from other people. So it's bringing up two different sides of the ecosystem simultaneously. And to some degree, this part, which is the individual, can go back to governments and say, you need to change these people, or these individuals need to start listening to them because they have the data of what's going on. They can own it, privacy, not going to get into that issue. But if I know what my 45 buildings are using in terms of power and demand and when, I can go back to regional and local governments anywhere in the world and say, how do we change this model? How can we share back some of the utility? How can we get better demand pricing? And the utility companies will suffer over time, and they won't invest into infrastructure.
So companies like Siemens or other data gatherers and aggregators will be able to use that as leverage to sort of empower themselves, and the utilities and regulators will need to respond. Thank you. Thank you. I want to give just a couple of minutes here, or do we have any more time, Navroop? Are we kind of at the limit, or do we?
I think we have 2 minutes and 1 minute from me at the very end. That's
okay, well, let me ask each of my hosts. I will not take my minute. I'll ask each of my three co-hosts to take 1 minute each, maybe to any concluding remarks. Nora, why don't you jump in?
Well, a lot of issues were raised in the last 2 minutes, and I'm going to say very quickly, I completely agree with them. And if I didn't make that clear, absolutely. So David, the thing that's missing is leadership. We certainly haven't had it in this country. I think they have more in other countries. How we can raise it to a global debate, I think bears some further conversation. We innovate, that's pretty much what we do here. And maybe we can help kind of share that innovation model. But again, the incentives, as you point out, are just wrong. So FERC has started an ANOPR. I think they're changing the game plan, but the codependence between political entities and monopoly utilities is unhealthy and continues to create barriers.
Thank
In
you.
a word.
Very concise and impactful. Thank you. Tara.
Really enjoyed the conversation, and in fact, wish we had more time to develop a lot of these ideas, right? You know, being a utility on the more innovative side, we've seen a lot of these issues crop up and are in the midst of grappling with where do we go from here, right? And I think part of that conversation really has to not only be about, okay, you know, how do we provide more customer information, more customer choice? How do we make better investments and get more efficient? I think it also has to be about equity. And I also think that we need to think about the tremendous investments and competition for capital that there is globally, right? There are a lot of things that people can invest in. Technology is certainly one of them. Utilities have certain amounts of investments by investors who are interested in that. But given all the transmission that needs to be built for renewable investments, given all of the infrastructure that needs to be built on, you know, both behind the meter and on the front of the meter side, in order for us to do electrification in the state, given all of the goals that we really want to meet, I think it's doable, but they come at a cost, and we need to think about how that investment is going to occur. It should definitely be about folks who want customer choice to have it, but it also needs to be about folks who have access, and we talked about this today, folks who have access and can afford it. And what happens to folks who cannot afford it or don't have easy access? Who's going to provide the infrastructure there, right? And who's going to pay for that? I think these are all questions that we have to think about simultaneously, but I also think that, you know, and we're very interested to hear constantly through our involvement in EEI, for instance, what other utilities are doing across the globe. So welcome everybody to have the conversation continued on this front with us. Thank you.
Thank you. Well said. And Carl, any concluding thoughts?
I started by suggesting that we might think about what we would do for electric services, for energy services, if we had a chance to rebuild it, starting today with what we know and what we want to do. I'd say that this is, given what I've heard, we may very well be at that moment. We've got a lot of old infrastructure that we could choose whether to replace with the same stuff or something different. We have climate threats that are just overshadow everything. It is the most compelling and exciting moment we have ever faced in this industry. It needs information in order to make intelligent decisions. It needs the discarding of biases, regardless of how many people think that that's the way it always should have been. And it needs fresh, young thinking, regardless of the age of the brain it comes from, in order to solve the problem and give us a better world. So I'm excited. I'm glad to participate. Thanks for giving me a chance to talk about this stuff.
Thank you all for a dynamic, wonderful panel. Thank you, Nora. Thank you, Tara. Thank you, Carl. Thank you, all of you, for listening and participating. Back to you, Navroop.
Thank you so much, Elliot. Wow, what a power-packed roundtable. And to conclude this two-day summit with a series of 10 roundtables, we have over 250, in fact, participants, 40 hosts, not a single one of them, was a no-show case. So we feel very proud of it and how engaged all the hosts as well as the participants were. I just want to take a moment to thank everyone, of course, the roundtable hosts for this session, Elliot, Carl, Nora, Tara, but also the Digital Economist team, who's been working on this around the clock, as you can imagine. Sydney, Mike, Shri, also Elliot, of course, and others. We do have a exciting networking session lined up for you, and we just posted a link to that. Actually, both Sydney and I did simultaneously, and it's ready to go. There are people in there, and it's very easy to join. So please do join us. And we again like to thank you. We do have recordings. We've been getting requests for the recordings. Yes, we have them, and we will be editing it as necessary and sharing with you. Keeping track of all the resources that have been shared with us in the chat function as well. So that's there. Just to share a little data point for both days, just the chat history was over 35 pages long on both days separately. So over 70, almost 80 pages. So just a fantastic dynamic summit. I do want to say this week also is, of course, the week of the very critical IPCC report. So it's no coincidence we are hosting this during this week. And that is something that has come up again and again. So all industries, all professions have to keep our climate realities front and center. And that is really the first step of beyond stakeholder capitalism towards shared value. With that, I'd like to thank you all, and we will see you in a second in the networking session. Thank you again.
Thank you. Bye, everyone.